Get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter, and from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 22nd day of July, 2013. Have a quick look at the numbers. The Dow up 13, S&P up 3.5, comp is up 10, gold, the bright spot, up $38, and crude down 73 cents a barrel. So happy Monday to each and every one of you. Hope you had a great weekend. I hope you had an opportunity to spend quality time with your family. Hope you made it to church yesterday. Well, it's a new week, filled with opportunities. The market, unfortunately, now we've had a little bit of movement today, and there's certainly been trades available, but from the big picture, and I didn't even tweet this last night. I tweeted it the week before, and I could have tweeted it. It looks like a quiet week. It does. It's a true story. In fact, we don't even have much news this week to drive the markets. We've got summer, we've got all the things that point towards a quiet week. My proprietary mathematical formula that I use to create the weekly trading zones, those point to a very, very narrow range week. And in fact, let me just show you how little news there really is. Now, you'll notice I have this little toolbar here with the CFRN logo and the radio and the RSS feed and the Facebook and the Twitter and the Gmail and Amazon. You could have this too. It's free. Go to the home page at CFRN.net. Let me show you. Let me show you just how easy it really is. CFRN.net. Okay. On the right-hand side of any page, just scroll down a little bit. You will see download our toolbar. Click it. It'll take you to this page. Okay. Install it. Works on Chrome, Firefox, Explorer. Gives you a lot of great stuff. I mean, you know, really good stuff. When you go to install it, your antivirus is going to caution you, hey, are you sure you know what you're doing? This type of stuff could be harmful. You have my personal guarantee and the personal guarantee of Jeff Bezos, CEO over at Amazon. That's the company, not the jungle. We both promise you there's no adware, badware, malware, or spamware. This toolbar, created in conjunction with Amazon, is filled with nothing but goodware. Make your life better ware. See there? Now, here's what I was going to show you. Look at the news for this week. I'm not going to go through all the things you get. Oh, and did I mention it's free? That's right. Daily economic reports. One click takes you to a pretty powerful economic calendar. How powerful? Well, let me just show you. Now, this came up on today. This is all the news there is today all around the world. Hong Kong, Europe, Mexico, everywhere. Now, existing home sales in the U.S., that was the only high-impact news event in the U.S. today. The actual numbers were 5.08 million. The forecast was 5.25. The previous was 5.14. So the numbers were a little disappointing. When they're in red, you know the numbers missed the forecast. Now, see up here where it says today, tomorrow, this week? See, at a glance, we're going to know every major economic news event around the world with a click. This is today. We've already covered that. Now, if you're trading overnight, maybe you're trading the euro, maybe you're trading the S&P during the London session. If there's news events going on in Europe or even China or Australia, you need to be aware of them. This is how you do it right here. So tomorrow, let's see what we got. In the U.S., do we have any high impact tomorrow? No, not one. This is a big real estate week, though, for news. We have a medium impact tomorrow, the house price index. We've got month over month, year over year. The month over month is low impact. Year over year is medium impact. And if we come on down, we've got a couple more news events, but we've got some T-bill auctions, nothing of importance. Let's go to Wednesday. What do we got Wednesday? We have new home sales. See, real estate again. That's high impact. New homes month over month, medium impact. Crude, low impact. More crude, gasoline, another T-bill auction. Okay, let's go to Thursday. Durable goods, high impact. Initial jobless claims, high impact. Natural gas, another T-bill auction. That's it for Thursday. Friday, we have no high impact. We have a medium impact, the Michigan Consumer Sentiment. Remember, that's the one you can buy ahead of time. It's subject of some controversy right now. In fact, right now, they're not making it available to the high-frequency guys. See, there's the guys who pay for it, and then there's guys who get it even before the guys who pay for it, because they pay more. They're the high-frequency guys. They would get it like 20 seconds, I think, ahead of the other guys that pay for it, which is like 10 minutes before the general public gets a hold of it. And I think I've mentioned to you that this Michigan Consumer, if you don't believe me, go Google it, Michigan Consumer Sentiment. Some college kids sitting around the dorm drinking beer, eating pizza, calling Mon Pa Kettle on the phone and going, hey, what do you think about the economy? I'd like to ask you a few questions. And they take a survey. Turn it into the guy that runs the dorm. He tallies the vote, and boom, they pay for another month of football and cheerleading. Now, I know that sounds ridiculous, but it's true. I may have taken some poetic and dramatic license, but for the most part, what I just told you, it's true. Okay? So, there you go. Now, if you're new to this radio program, I'd like to extend to you a very special welcome. Hope you'll make this a regular stop each and every trading day. We're in our 8th year of broadcast. That's a long time. That's a long time for anybody to do anything on the internet, quite frankly. But it's true, 8 years. I got to tell you, when we started, I would have never imagined. In fact, we were a grassroots movement speaking out about naked short selling in the stock market. Somebody had said, well, 8 years from now, you won't even be trading stocks or too concerned about naked shorting because you'll be trading E-mini futures in a purely electronic market. I'd have said, huh? I don't even know what those words mean. And I didn't. But now I do. And here I am. And here you are. And I'm glad you're here. Okay? So each day I open up. We have a good word for the day. Just a little spiritual encouragement. Which, by the way, we gather every morning at 9 a.m. on a conference call, people around the world on a conference call for 20 minutes. Nothing religious, just praying one for another. People bring their prayer requests, their praise reports. We take turns each day, different ones share scripture and talk about what it means to them, and then we talk. We just talk and encourage one another, have fellowship for 20 minutes via conference call. You are welcome to join us any day. Go to Google, and from Google, just type in Traders Prayer Breakfast. Right there, that's it, Traders Prayer Breakfast. It'll show you the link. Click it, bookmark it, and then save that page. That phone number, it's been the same now for a few months, but it might change. Okay, it might change this week. If it does, I'll make sure everyone knows, and that page will get updated. So if you bookmark the page and the phone number gets changed, you'll have the new number. Okay, so it's a great idea to do. Bookmark it, and then any day you can join us from anywhere. You're driving to work, walking in the park, you know, doing the dishes. Hit speed dial on your phone, dial in, put it on speaker, mute it. Right? You got to mute it if you're washing dishes because it makes a lot of noise. And then you can just listen. You can be as anonymous as you want to be, or you can get right up front and be as loud as you want to be. It's up to you. You get to choose. Bring a friend, bring a neighbor, bring a coworker. You know, at your office, there might be 3 or 4 of you that want to gather in one of the offices or the break room, throw it on speaker, and you can all join us as a group. Possibilities are endless. I hope you will join us, okay? We're going to get to the chart here in just a moment. After the good word for the day, we go to the charts, take a look, see what's going on. Then we take a look at the headlines, if there are any. And then Michael does our recap. We have a live trading room every morning from 9:30 a.m. to 11:30 a.m. where we trade real money in real time in front of real people, just like you. And so Michael recaps everything that happened in the live trading room. The good, the bad, the ugly. We sweep nothing under the carpet. If a trade goes to its target, awesome. If we get stopped out, it's just another trade. Okay? We don't get too excited or too depressed over any one trade, because no one trade should ever define who you are as a trader. If the next trade is going to make or break you, I beg you, don't put that trade on, because you should never be in that situation. If you are, something needs to be fixed, and we can help you fix it. Call us, 949-42-EMINI. Before you trade again, 949-42-EMINI, or toll free, 866-928-3310. Michael's on vacation. He's at the Cape. However, he's still showing up and trading live every day in the live trading room for 2 hours, and he makes a video recap of the previous day's live trading room. And so today, when I play the video, I probably won't play the entire video, but I'll play part of it. You'll see what happened in the live trading room on Friday. Now, on our website, if you go here, View Live Trading Room Results, click that, scroll down, going all the way back to August of 2011, we have posted a video recap each and every day. Now again, this covers the good, the bad, the ugly. These are our monthly totals. This is only the trades taken in the live trading room in front of a live audience during those 2 hours. Commissions have not been deducted from these numbers. But if you request the spreadsheet from Michael, he'll show you the numbers with an $8 round turn commission factored in. Now, $8 is a high round turn commission. Please don't pay $8 per round turn for your E-mini futures trading. Before you do that, before you trade again, call 866-928-3310. Now, let me say this about commissions, okay? There's an old saying, you get what you pay for, right? Well, that's not always true. Sometimes you don't get what you pay for. Commissions are how a broker earns his living. He deserves to earn his living just the same as you deserve to earn your living. You as a trader, as part of your business plan, you have to factor in the cost of doing business, and that is the commissions. Okay? You should pay a competitive rate, But if you're just searching around for the cheapest possible commission that you can find, I'm going to say that you're approaching this from the wrong angle. Make sure you get a competitive rate, but also take a look at the type of service you're going to get. When you call in, are you actually going to be able to speak with your broker or with an assistant? If you do get your broker on the phone, is he a trader or she? Do they actually trade in the markets? Because if they don't, then they don't understand half of what you're talking about as a trader. Maybe they traded equities once, or maybe they're active in, mutual funds. But if you're an E-mini futures trader, you need someone who trades E-mini futures. If you trade crude or gold, you need somebody who is an experienced trader in those markets. Well, guess what? When you call that toll-free number, 866-928-3310, you're going to speak to Bert or Leslie from Daniels Trading. They are our brokers. They're the only broker we recommend. If you become a client, we make no money, we get no finder's fee, and if you trade with them, we don't get a percentage of commissions, nothing at all like that. Okay? We recommend them because we truly believe they are the best in the business. And if you become a CFRN partner, we want you to have the best technology, the best methodology, and the best broker there is. And they are it. Okay? These are they. Call them. Talk to them. Even though you're not a client, they'll spend time with you, answer questions. You know what? They'll even help you spot trades in the market. When's the last time your broker was willing to sit with you, hang out in a live market, and help you spot trading opportunities? I dare say probably never, because most brokers just don't do that. They don't have time for it, or at least they think they don't have time. The difference with Bert is he makes time. Now, you're thinking, well, he'll probably do that to earn my business, but, then what? Well, I'll tell you what. Once he earns your business, he'll work even harder to keep your business. Why? Well, because think about it. It's easy. It's the amount of effort and expense that it goes into in any business to acquire a new client is great. Any smart businessman will spend more time and effort keeping a client than he will finding a new client. A lot of brokers, unfortunately, don't think that way. They churn because of that astronomical rate you've heard about trader failure, that 95% number you've heard, 95%. You know what? Unfortunately, that number is probably pretty close to true. Now, with our partners, I know for a fact it's nowhere near that, but that's because we spend an awful lot of time with our partners teaching, training, coaching, and laying out a plan that if you follow it means you don't ever have to blow up your account. And if you do, if you follow our instructions, it'll take you a long time to blow it up if you follow the instructions. If you don't, we can't control that. But if you call Bert, he can help you. He understands our methodology, our system, our indicators. He'll help you get your charts up and running if you want to take a free trial. He'll make sure you know how to put on and take off orders in the simulator. I'm telling you, if you are ready to learn how to trade E-mini futures for a living and build relationships that will last a lifetime, take the free trial and then call Bert toll free, 866-928-3310. Let's go to our good word for the day. It's from Ephesians 6:15, and it talks about not a bad way to live. Okay? And your feet fitted with the readiness that comes from the gospel of peace. Let me share that same scripture with you from the Message translation. Peace, faith, and salvation are more than words. Learn how to apply them. You'll need them throughout your life. God's Word is an indispensable weapon. In the same way, prayer is essential in this ongoing warfare. Pray hard and long. Pray for your brothers and sisters. Keep your eyes open. Keep each other's spirits up so that no one falls behind or drops out. And don't forget to pray for me. This is Paul writing. Pray that I'll know what to say and have the courage to say it at the right time, telling the mystery to one and all, the message that I, the jailbird preacher, that I am responsible for getting out. Tychius, my good friend here, will tell you what I'm doing and how things are going with me. He is certainly a dependable servant of the Master. I've sent him to not only tell you about us, but to cheer you on in your faith. Goodbye, friends. Love mixed with faith be yours from God the Father and from the Master Jesus Christ. Pure grace and nothing but grace be with us all who love our Master Jesus Christ. It's Ephesians 6:15 through 24, the Message translation. If you've never read the Message translation, I'm going to encourage you to take a peek at it. You can do it for free online. Just Google up the Message, and there's a number of sites where you can read. So, what's that all about? People today live in very high-pressure lifestyles, and it is taking a toll on us as a people. Dr. Joel Eltz has this to say: our mode of life, the way we live, is emerging as today's main cause of illness. The American Academy of Family Physicians says that 2/3 of all visits to doctors are stress-related. 2/3, think about that. And that stress is now known as the major contributor to heart disease, cancer, accidental injuries, and suicide. The one that really surprised me there was the accidental injuries. People attend stress seminars and they devour books on stress. Sometimes they find that just focusing on stress makes them even more uptight. But let's face it, stress and pressure are a part of life. Even Jesus Christ promised us that we'll all face it. He said, in this world, you'll find much tribulation. Tribulation also means pressure or stress. He goes on to say, but take heart, I have overcome the world. Now, Jesus does not promise us freedom from pressure, but he does promise us peace amidst the storm. Big difference. Inner peace is a byproduct of knowing Christ as Savior and Lord. The good news is it's available to all who trust in him. Yes, pressure is a part of life, but Christ gives us peace amidst the pressure. And I can tell you from experience, that's not a bad way to live. And that's our good word for the day. Let's turn to the charts. This is the S&P 500 E-mini futures. This is an hourly chart, and if you're unable to see my chart, please go to the home page at CFRN.net. On the right-hand side of the page, there's a big microphone. Click that, follow the instructions, you'll log in, you'll see the charts. You'll also be able to participate in the discussion. Everyone has to register once a month. Once you register today, you won't register again until the 1st of August. And on the 1st of August, we'll all register again for another month. Okay? And then each day you get an email that reminds you about the show and gives you the link so that you can join with one-click access. So let's back up just a tad here into last week. The zones that you see on the chart are last week's zones. I've not put the new zones on the chart yet. The weekly trading zones go out to the partners every Monday morning before the market opens. The new zones went out to the partners this morning via email before the market opened. Now, we're only going to go back here to the 18th. I've already covered much. I've covered everything that went on last week. Just want to come here to the 18th at 0200 hours when price broke up above the weekly trading zone at 75.76. Price traded right up to the next weekly trading zone at 1686/87. That's a 10-point move. Now this is what we expect to happen. Price, once it reaches a trading zone, will consolidate for a period of time. Coil is another word or another term for it. Basically, it's making up its mind if it's going to go to the next zone overhead or if it's going to return to the zone from whence it came. After much consolidation at this zone, the market decided to head north where it came to a stop at the next weekly zone. Consolidated there for a couple of hours, about 2.5, and then it made a move down. I haven't done this in a while, so it's about time. Price, once it consolidated, it did this, and then it did this, and then it did this. That pattern right there could potentially be the most important thing you'll ever learn on this radio program. Okay. Use it in your trade, no matter what method you use. If you throw the I Ching to place your trades, that pattern might save you. So give it some thought. Price comes down, pulls back into the zone, confirms the resistance, and then moves right down to the zone where it consolidates, and although it looks a little bit different, it did this, then it did this, and then it did that. See, that's just what it does. And if that's what it does, wouldn't that be a good thing to know how to use and how to spot? So 10 points up, zone to zone, 10 points back down, zone to zone, and then 10 points back up, zone to zone. 10, 20, 30. Is this unique? Is this an anomaly? Is this a once in a blue moon kind of a thing? No. This is a day after day, week after week, month after month, year after year happening. Go through the blog, look at, all the charts from previous weeks, previous months, previous years. And you'll see that price just does this over and over and over. Once you harness that, it can make for some very good trading opportunities. Now, on Friday afternoon, right at the end of the radio show, I sent out a tweet. Well, over here we had a tweet to be long above 81 that ran up to the zone. And then over here, 81 again was in play, but I sent out a tweet at 84.25 during the radio program. And I'll send one out today if I see something nice set up. And we were only looking for it to go to the zone. We were looking for a couple of points. That's it. And we got it. In fact, we got it in 1 hour. Inside of an hour. About 20 minutes, as I recall. From the time I tweeted it till we hit the target, it's about 20, maybe 30 minutes. Okay, then price continued a little higher into the close Friday afternoon. Last night, price rallied up to 94.25. We had a target up here on a tweet at 95. We came within 3 ticks of hitting our target. It happens. Now, I've not put the weekly trading zones on the chart yet, but we do know that weekly trading zones have what I call a carryover effect. Okay, Monday, Tuesday, by Wednesday it's starting to weaken a little bit, but there is still some carryover. And we can see it here. Even though this is last week's weekly trading zone, look what happened. Price ran up, pulled right back into this important area at 86.87. Now remember, this is the same area that over here was good resistance. Now it's good support. And on this move up so far, we've had a swing high of 1693 on this swing. Over here, we got all the way up to 94.25. So far on this swing, up to 93. Now, I'm going to show you one last thing, and then we're going to pop over to the recap for a few minutes. I'm going to pour a cup of coffee, and then we're going to head out to Vegas, talk to David Williams from PageTrader.com and Miss Robin Dane, the trading coach, which, by the way, we had a great Coach's Corner Friday afternoon. If you missed it, I'll be getting that podcast posted later today, so be sure to tune in and check that out. You can join us, by the way, every Friday at 3 p.m. Eastern for the Coach's Corner with trading coach Robin Dane. Okay, let's go to our 4-tick range chart. Last night, we had the swing high up at 94.25. We had right here a nice short trade using the slingshot, and the entry here from 90, this one got down to 88.25. Okay, then we went sideways a little bit. Didn't have a long trade there. But as we were coming down this morning into the zone, and the partners had the weekly trading zones at this point, because they get them right before the market opens. Coming down, okay, we've got bearish divergence here. We've got a bearish cross, price pulls away, price pulls back. Beautiful trade. The slingshot puts you in this trade at 88.75, and we hit a swing low of 85.50. Okay, so about a 3-point trade. Then price bounces off of a very important area right here. I'll show you that. I'll show you why it's important tomorrow. And then the market heads north, and we get a bullish cross. Price pulls away. Price pulls back. We've got bullish divergence. And price goes from 89 all the way up to 93. 4-point, beautiful, absolutely perfect textbook move according to the slingshot and the criteria. So if you are a CFRN partner using the bigger picture backdrop and the criteria for the slingshot, you are able to take the short trade and the long trade, okay, two beautiful trades, and you never had to risk more than 8 ticks. That's the beauty of the slingshot. You never risk more than 8 ticks. And we use that same trade setup not only to trade the S&P 500, but the Dow, the NASDAQ, the Russell, gold, crude, soybeans, the euro, the yen, copper, and even more. How's that possible? How could you use one trade setup, one time frame, and one set of indicators to trade all those markets? Take the free trial and see it for yourself. You don't have to take my word for it. That's the beautiful thing. You can come watch it live in real time, and we'll be happy to show you. We're going to go to the recap real quick. I'm going to run it for about 5-10 minutes. I'm going to grab a cup of coffee, and then I'll be back, and we'll go out to Las Vegas, Nevada, talk to Mr. David Williams from PageTrader.com and Miss Robin Dane, the trading coach. So stay with me. Don't touch your radio dial. We'll be right back after the recap.
Good morning, everyone. Today is Monday, July 22nd, 2013. This is a recap of Friday, July 19th. Friday, July 19th, 2013. All right, I just filled on the crude, not the crude, on the gold. Okay, I'm short the gold right here at 22.5. 22.5 gold short. All right. Let's see. On Friday, July 19th, what did we have? We had plus 15 on crude, minus 3 on the Russell, plus 15 on copper, minus 4 on gold, minus 8 on the soybeans. Get my spreadsheet out. Just go through the spreadsheet. Because I have stuff that's written down here. Oops, I should have brought my stop to break even there, I think. I shorted 22.5, it dropped down to 22.0. I should have had my stop at break even here already, but I didn't. So when I get a chance to move my stop to break even, I'm going to. All right, here's what we had. This is what we had on Friday. On soybeans, we had minus 8. On the Russell, we had minus 3. On crude oil, we had plus 15. On gold, we had minus 4. And on copper, we had plus 15. That was our morning on Friday. Okay. So I had a better day Friday than I thought. Excellent. Okay. We are at $3,467.50 per contract so far in the month of July. All right, $3,467 per contract so far in the month of July. Let's see. Let me go through the trades that we took on crude oil. We just switched to the U crude. The trades that we took were on the Q, but let me go back to the Q so I can do the recap with it, okay? I'm just going to go back to the Q on the chart and do the recap. I have an 8-tick stop on this gold trade, and it just stopped me out. I should have been at break even on that trade. I should be at break even right now, but I'm not. Let me write it down. Gold. And today's what, the 22nd? Okay. Here we go. Back to Friday on the crude oil. Let's see, our morning started right here on the crude. All right, so the very first trade we took on crude oil Friday morning after 9:30 in the 9:30 to 11:30 session was a down close right here. Looks like we took a little bit of profit on that one. All right, took another short trade over here. This one, same thing, a down close below the trend line. Took a little bit of profit on that. The next one was right over here. Again, a down close below the trend line. We took some more profit on that. We missed that one, and that one, and that one, which were all very nice trades in a nice trending market. Changed directions, and we missed that one, and that one, and that one. Again, all very nice trades in the trending market. I'm not sure why I have a square on this one, but I do. I think this was a head and shoulder pattern I might have been trying to point out. It was actually a valid long trade, too, that went nowhere. Price turned around, came down. There's a shorting opportunity right in here that looks like it would have stopped you out, given another opportunity here without a lower swing. Either way, nothing. Right here we tested the BBC and gave an up close. That was good. Over here we had an up close above the trend line. Over here we had an up close above the trend line. All those were trading opportunities on Friday morning that we missed. There was a down close right here that we took, a down close below the trend line that we took right here. Okay, and nothing in there. Down close below the trend line. This was just after the morning session. Down close below the trend line right here that we missed. That was a nice opportunity. Now, and that was crude oil on Friday morning. Okay, this morning we're switching to the U contract. Okay, we're going to switch to the U contract this morning. Okay, I was looking for an up close above the trend line before the black line got down below the BBC, and we didn't get that. Okay, we didn't get that. So I'm going to take all the drawing objects off. I'm going to take all the drawing objects off of the chart right now by clicking this down here and then the X. That's going to remove all the drawing objects that are on the chart. All right, since we just swapped to the new contract. Excuse me. The newer contract. All right, so on gold, it's a little mixed up in here, as you can see. There's not a whole lot going on here that we can do. To check the volume for a contract, what you have to do is you have to just go into the control panel and click on the contract, and it says volume in there. You know, if you jump in, didn't mean to do that, into this section right in here, and you find the contract, it'll show you the volume right in there. Okay, that's all. Pretty straightforward. All right, we have a down close right here. A down close, that's a lower close. Okay, that continues the downtrend on the gold. All right, so now we can take a pullback, which is starting to set up right now. All right, let's see, I'm still doing the recap. So that right there was the down close below the trend line at 21.3. 21.3. Okay, right there was the down close below the trend line at 21.3. It had already gone 4 ticks in favor of the trade, but I jumped in. I'm in at 21.4, and I'm out at 21.4. Okay, but 21.3 was the spot to jump into that, and it just took me out of break even. It's making a trend line now. Okay, again, I should have had my stop, or I shouldn't have actually gotten into that because it went 4 ticks from the entry. It went, just make sure I don't have any noise hanging up there. I don't. Okay, it went 4 ticks from the entry. And that's when you don't want to take the trade anymore, because you would be moving your stop to break even anyway. But we do have divergence again for another close down below the trend line. Okay, we do have divergence again for another close down below the trend line. So we can grab that if we have it. Let's see, on Friday, back to Friday and the recap, we had Russell trades on Friday. This was Friday. All right, on the Russell, let's see. I think this, no, that wasn't Friday. That wasn't Friday. This was Friday. Yeah, July 19th. Okay, that was the pre-market session. Now, after the open, right here at the open, there was a trade there and a trade there. We missed both of those opportunities. Came down here and gave us a shorting opportunity right in here. We missed that. We took the next one. We took the next one right over here, which was a close below the trend line, and that stopped us out. Excuse me, that stopped us out. We missed this opportunity and this opportunity and this opportunity on the long side. Then we grabbed a little piece here and a little piece there. That got us, I believe that got us to -3 ticks on the morning. Okay. I think that got us to -3 ticks on the morning. Then in here let's see. Hold on a sec. Over here where it is right now, guys, we have blue on the cycle, and the cycle's headed up pretty strong. We're going to need to down close below the trend line, but I doubt that it's going to come together given the way the cycle is headed up. Okay. All right. Let's see. That was it. That was all there was for the Russell on Friday morning. Okay. That was all there was. Now, see, I've done crude and Russell on copper on Friday. We had a good morning on copper on Friday. GNG, then am I looking at natural gas? Give me a second. I'll get this together. There we go. Over here on the copper on the Friday morning, we had these for the trades. We had some pre-market trades. And then once the market opened up, we took a short right here on the down close below the trend line. All right, we took the short right there on the down close below the trend line, and we made some profit on that. Let's be about 8 ticks. Then we took a long trade over here on up close off the BBC. Now this one we didn't need the trend line on, and I'll show you why. Whoa. And there we go. I just had to populate. We didn't need the trend line on that because if you look at step 1, the MA1 crosses above. Step 2, price pulls away. Step 3, price touches the BBC and closes up. And step 4, you have the divergence with the cycle being the proper color. Okay? The divergence with the cycle being the right color. That was textbook right here. Step 1, step 2, step 3, step 4 was the divergence down here. So you don't need a trend line for this one. Okay? It moved up and we took some profit on that. I believe that was the last trade that we took on copper. It was. That was the last trade that we took on copper. We did take some trades on gold on Friday. Let me scroll back in the gold. Wow, look at the movement this morning on the gold. I didn't even see that. I was driving around looking for a dog. There's a copper short right now, Matt, you see? Okay, yeah, copper is setting up to the short side right now. It did just put in a wick, though. So it needs to close down below that wick. Thanks, man. All right, let's see. Scrolling. There we go. This was Friday morning and all the trades that we missed on gold. Our first trade that we missed was right here. It was a down close off the BBC, but it was bearish divergence and all that. We missed that one. Changed directions. We missed that one, that one, that one. This is not a trade right here. This was a head and shoulder pattern I was trying to point out. There was a short trade right here that we took a little bit of profit on, and there was a losing trade somewhere in here that we took. Another long trade right in here. Look at all those wicks. It's nasty in there. Here's our losing trade. We took a long trade right here off the BBC with bullish divergence in a blue cycle. All right, and that stopped us out. Over here we took a long trade that we got stopped out of break even on. Okay, this was a long trade above the trend line. Okay, and that was all we did on gold. That was all we did on gold on Friday morning. All right. Now, over here, you see this on the copper right now. The cycle is still red. If we get a down close on this bar, I don't think it's going to happen, but if you get a down close and the bar is still red, you can short that down close. You don't need the trend line. But I think what's going to happen, if it closes down, I don't think it will, but if it does close down, I think the cycle line is going to turn blue. If it turns blue, then you need to down close below the trend line. Okay, if it turns blue, you need to close below that trend line. I just missed the long trade over here on the crude oil. Did we actually have one on the black line down below the BBC? It's starting to set one up right now, though. Okay, starting to set one up right now. See, it closed up, and it was blue on the cycle. So all those things came together to keep you out of the trade right now. Let's see, what else did we trade on Friday? We traded soybeans. Let me slide this over here. We traded soybeans on Friday. All right, now we missed a couple of trades here on the soybeans. We missed this nice trade and this nice trade on soybeans, and then we jumped in on this one when we thought it was changing directions. And unfortunately, it just caught us up in some chop and snagged 8 ticks away from us right there. As the morning went on, though, there was some nice opportunities right in here on the soybeans on the long side. Right here was the spot to get long on that. And there was a follow-up one right here if you draw the trend lines. And continuing with the trend lines, there was another one right in there. All right, change directions. There was a short trade right in here. Short trade right in there. Didn't put in any lower swings, so you wouldn't have been looking for anything else after that. But that was after the morning session anyway. All right. That's it. That's the recap for Friday morning. So let's go back to our spreadsheet. Currently, we are at $3,467.50 per contract for the month of July in the live trading room. All right. Friday, we were -8 on the beans, -3 on the Russell, +15 on crude, -4 on gold, and +15 on copper. It took us apparently 24 minutes and 5 trades to get to $107.50, and we traded 13 times all day on Friday. All right. If you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. In the free trial, oops, this is the long trade right here. In the free trial, actually, the better long trade is with the more divergence. Now, there was no divergence on this little spot right here. Look for it to pull back deeper over here. Sorry. In the free trial, you get access to our live trading room. And in our live trading room, you get to download, you'll be sent an email that shows you how to download the chart, the charting platform, all the indicators, all that stuff, and how to access the live trading room. So you can watch us trade live every morning, just like we're doing right now. All right. If you've already taken the free trial and you want to become a partner, send us an email at support@cfrn.net, and we will we'll give you the information you need to become a partner. Okay. That's it. With that, I am going to wrap up the recording, the recap for this morning, and we'll catch you later.
Okay, guys, that does it for the recap. We actually got all the way through. Let's switch these screens back.
All right, good morning, everyone.
All right, there we go. I'll make sure I got everything over here shut down so I don't needlessly chew up precious bandwidth. Oh, we're good. Hey, a lot of you, most of you, got an email over the weekend that says, call me, I got some exciting news. I'm sorry, that was a mistake. I bumped up against the wrong machine, and before I knew it, it had sent out several thousand emails. Many of you spotted it and emailed me and said, hey, I got this email. I think it was a mistake. Others frantically tried calling, and you left messages, and I am so sorry. I apologize. Now, unfortunately, the machine I bumped up against, it may trigger another one later today. If it does, I'm sorry. Just ignore that one too. And I'll try to be more careful. Next time, I'll turn the lights on. But you were all very quick and responsive, and it happened in the middle of the night. By the way, what were you doing up that time of night? People always ask me that. Hey, I got an email from you, or you sent out a tweet. A lot of people are concerned about my sleep patterns. Even my son this morning, he got up and he goes, Dad, did you work all night? Because when he went to bed, I was at my desk, and when he woke up, I was at my desk. And I was like, no, I took a little cat nap in there. So, no, I get my rest, you know, but gotta get the job done, right? All right, let's see where we're at in the market. We're heading out to Vegas. Kind of quiet, guys. It's going to be a quiet week. Okay, the math says it's going to be a quiet week. The lack of news says it's going to be a quiet week. And today is our first evidence that it's going to be a quiet week. The swing high of this session, the first session of the week, which began yesterday afternoon, the swing high 1694.25, the swing low 1685.50. call it 9 points. So the ATR for today, so far, 9 points. Now the ATR on the daily Globex, look at it, it's already dropped to 11. Now just back on June 27th, look at that, it was 30. No, there we go. Yeah. On June 27th, the ATR was 30. That means from stem to stern on the Globex session, 24-hour clock, from the high of the day to the low of the day, 30 points. This is a 14-day average. Currently, as of today, we're at 11.9. That's 1/3. That's 1/3 of the range that we had days ago, June 25th, 26th, 27th. So, but you know what? For summer, it's been pretty good. And we kept talking about it. These are the good old days, and I kept saying, make the best of it, because I'm going to tell you something. Without volatility, a trader has nothing. It doesn't matter how smart you are and how many patterns you know and how many indicators you have and how many tricks you have up your sleeve. If the market's not moving, none of those things do you any good. In fact, those things actually end up hurting you because you want to use them even when there's no movement. And, well, we know how that ends. Not well. You just keep getting stopped out, and you die the death of 1,000 cuts, and it's just horrible. Okay? My tweet last night was so innocent. It said, let's just get warmed up with a little trade from 93 to 95. Okay, at the time I tweeted it out, we were sitting at 92. And so from 92, we did glide right up to 94.25, but that's 3 ticks. Now remember, I was trying to keep it, small. I was trying to respect the low volatility that I expected. I didn't think 2 points was, asking for too much. Apparently it was, because the 8-tick tweet only managed to go 5 ticks of the 8. And so it is what it is. However, if you're a partner, you don't have to rely on the tweet because you had a beautiful slingshot trade coming down. A beautiful slingshot trade heading back up. And whatever happens from this point here, I dare say you'll get a slingshot trade going north or south. You know what your targets are in both directions, and you never have to risk more than 8 ticks when you're trading the slingshot. You never risk more than 8 ticks in the S&P or the Dow or the Russell or the NASDAQ or gold or crude or soybeans or the euro or the yen, copper. Any market that we trade, we never risk more than 8 ticks on a slingshot trade. So, with all that said, let's get out of here. Let's go to Vegas. Don't touch your radio dial. We got to pause for a very brief station identification, and then we'll be right back. Don't go away.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310. And we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
We don't need you now, we own the way. I thank the Lord for love like ours that grows ever stronger. And I always will be true. I know you feel that same way too. Oh, I love you more today than yesterday.
Good morning, Dwayne.
David, good morning. Welcome to the show.
Thank you very much, and good morning to everybody out in the world of the Internet and world of trading.
Hey, Robin.
And it's a great day here in Las Vegas with a little bit of rain.
Awesome. You know, we had more than a little bit of rain Saturday night. I woke up Sunday morning and my backyard looked like a swamp in Louisiana. It was.
Oh, yeah, it was amazing out here. I dreamed the other night I was in a big marshmallow factory. When I woke up, my pillows were gone.
Oh,
No. It's so bad. We had one of the most intense storms that we've had in about 10 years here.
Yep.
I've been here for 34 years, and I've seen a lot. And this storm was absolutely frightening. I mean,
it was.
Where I was in it, it was actually frightening. I was actually in traffic. We were at a mall.
Oh my gosh.
And no one could leave the mall. This is a mall on Las Vegas Boulevard, so it's a kind of a, it's a nice mall. It's a big mall, and no one could leave because the storm came on so fast and so suddenly and became so big, intense so quickly.
It was amazing.
Yeah, I've heard a sound inside the mall that I bet you no one has ever heard before, and that sound is the sound of the hardest you can imagine rain being thrown into glass, into the glass that run the size of the mall, and that sound coming into the mall was nothing like rain on glass. It was a whole different kind of sound. It was so intense. Nobody knew what it was, and then when alarms started going off in stores inside the mall because of the wind and whatnot, and when people tried to leave the mall, they couldn't leave because the water was coming the wind was blowing the rain in torrents towards the mall, and you just couldn't leave. And I knew that if we didn't get out of there pretty soon, it was going to be hours and hours before we could get home because this town still has some water problems with regard to flooding, and this kind of storm would just, we had places here whose roofs collapsed, but
the trees down. You see the trees, huge trees.
Huge trees fell. It was probably the most lightning I've seen in 10 years in a storm. It was the most incredible lightning I've ever seen. We have something called ball lightning out here in Nevada. Now, I haven't seen it, but only once. Ball lightning is where a lightning bolt goes down to the ground, and after the lightning bolt shuts off, there's a ball of lightning that literally, believe it or not, rolls on the ground. It stays on the ground. Yeah, it's called ball lightning. And I was in Boulder City. I lived in Boulder City for many years, and one night it was lightning all around me. I don't know what I was thinking, but I pulled over to the side of the road and I got out of my car just to see what it was like to be standing around all this lightning that was hitting. It wasn't hitting right where I was, but it was not far. It seemed like it was very close. It's hard to judge lightning, how close it is. Anyway, while I was out there, I saw the first and only example of ball lightning where the lightning bolt came down and there was a big flash, and then when the flash went away, there was still light on the ground in the form of kind of like a ball.
Wow.
And it moved for about a certain amount of time and then just dissipated. So that's the only time I saw that. But anyway, this storm on my way home, it actually was, you were thinking to yourself, this could really turn out bad. That's how bad this storm was. And then, Dwayne, you guys have something, although I don't really think this reaches where you are necessarily, Dwayne, but you guys have these big, almost biblical dust, not even a storm, but dust just comes and takes over the entire city, and you can't see anything.
They got a name for them. I never heard this name until like 2 years ago, a haboob.
Haboob, that's what it's been called.
But I never heard that term until like 2 years ago, but I guess it's an ancient term. So.
Yeah. Anyway, and I know you can make all kinds of funny jokes about it, but that's what it's called. And from the sky...
could I?
Yeah.
Haboob? Oh, like boobies? Okay.
Yeah.
Okay.
Anyway...
I hadn't thought of that, honestly.
Yeah. Well, you got to stay up with the times.
I had not thought of that.
From the sky, that dust storm is one of the strangest things. It looks biblical in nature. It looks like something is just descending on this entire city.
Yeah.
And it's everywhere. And it's just dirt flying through the air, and it just takes over everything, covers everything. It's one of the strangest things I've seen. And you guys have had several of those in the last couple of years.
Mm-hmm.
So
we had a major hailstorm 2-3 years ago, and I got trapped at the post office downtown, which is also... this post office in downtown Phoenix was built I don't know, right after the turn of the century, I think, and it used to be a bomb shelter. Remember when, you know, if you grew up in the Cold War, as you and I did, you know how different buildings were designated as bomb shelters and whatever? Well, this building is built like a fortress, and it was an actual bomb shelter. And I was inside of there when this hailstorm hit, and the way the windows and doors were getting pelted, I mean, it's like what you're talking about, David. This thing was phenomenal, and it damaged cars were literally totaled. Insurance companies came out to adjust cars and just said totaled. Not all of them, like mine. I got about $2,500, $3,000 on my 2 cars. I didn't get them fixed. I didn't get them fixed because they're ready to be retired anyway. In fact, the insurance guy, he said, "Hey man, if I were you, I would not spend this money on fixing these cars." He goes, "I mean, you can if you want to. It's your insurance money, but," he goes, "how long do you plan to keep these cars?" I said, "I'm going to drive them until they drop." He goes, "Well," he goes, "and you're not driving them based on the aesthetics now, are you?" I go, "Nope." He goes, "Yeah, use the money for something else." This is the insurance adjuster told me this. And then our house, we got our screen. We have some these energy efficient screens on our windows. We have a 2-story home, and we got money for those. He said, "Just flip them around." He said they're perfect on the other side, but you get paid for them because they're damaged. So
there you are.
Yep.
Well, we've been on alert ever since because of the fires that we've had and all that mud that comes from the ground. We were worried about the washes being filled with mud, which makes it really, really challenging if somebody gets stuck in that stuff. And so we had all the ash from the mountains and the rain, and we're kind of waiting for something to happen today. But yeah, I mean, I love to watch lightning, so I walked outside my door, and I have like an overhang, so I'm not getting wet. And I stood there for about 5 seconds, and I went, "What am I nuts? Go get inside."
This was
It was intense. It was intense.
It's kind of like what they have in Arizona, the monsoons, which will come out of nowhere. You're just sitting there, and it's as clear as a bell out there, and 10 minutes later, you think you're on the set of Gilligan's Island, and they're faking a storm because they're throwing buckets of water in your face. That's what's happening. I've seen that happen out there, and that's what it was like out here.
70-mile-an-hour winds. I mean, that's what was really intense. That's why there's that whole condo complex got hit with trees.
Well, there's several businesses whose roofs collapsed and all kinds of things from the storm.
Terrible,
so it's
terrible,
very. That's why they say that when you're in the Nevada, get flood insurance. And people say, "Well, I'm in the middle of the desert. Why would I need flood insurance?" Well, I got news for you. Strange things happen in the middle of the desert.
Ask Noah.
That's right.
Yeah.
So Bob Z says that if you are like in the service industry and you get hired to do cleanup after one of those big dust storms you were talking about, it's called a haboob job.
Oh.
Now
that's exactly what it is. No, you have to say that's pretty cute.
Way to go,
Somebody
Bob.
had to take and run with that. Somebody had to run with that. I mean, you dropped the ball on that one, Dwayne, but this guy picked it up nicely. No, that's all right. He picked it up very nicely, and he very tastefully handled that, and I want to give him credit where credit's due. Okay. Anyway,
it's overcast a little bit today. We got a little bit of cloud. I mean, we're in that time of year. I mean, we could get rain off and on. We could have rain or a torrential downpour any time of the day for the next month. Actually, up to 2 months, really, because this is just middle of July. It should. Well, it could go into September. So yeah, batten the hatches.
Yeah, no, I did, and believe me, the thought had crossed my mind. You know, everybody knows I drive an electric car, and my thought had crossed my mind. I was going through some water there that was pretty high.
Yeah, what is that?
Well, all these things. The whole container is triple sealed, and I checked it out, but it is it struck me that hey, this thing runs on pure electricity. So I hope water doesn't get in there, and it was fine, of course, and so no problems, but.
You can buy one of those little Kia Souls. I was looking at one the other day when I went to the grocery store, and it's kind of cute, and it's sort of advanced in how you can hook up your phone and different things. And I saw a commercial could buy one of like a 2013, because the 2014s are coming out. You can pick up a 2013 for like 13 grand cash. I mean, you're done. That's it. Just out the door.
And they are like a little van. They kind of fit you because they have a little van kind of thing going on there.
Well, I was really surprised because I went on the internet to look at the specs and the gas mileage. I was surprised. It's not that good.
No.
Really?
Yeah, no, like 25 miles per gallon in the city.
Yeah, that's
on the highway. Anyway, I read it off to my wife, and she says, "Well, that's not good." So I took her word for it.
Yeah, when the woman says that's not good, you just quietly walk away and realize, okay, that's what that is, not good.
Well, I have a headline today regarding gas. Let me see what that.
I told you we're going to probably see $6 in California.
Gas prices are displayed at a 76 gas station in Los Angeles, and I'm showing regular at $4.19. It says American motorists are bracing for further increases in gas pump prices this summer after average national prices rose 12 cents in the past week alone. AAA says drivers are experiencing sticker shock as increased summer demand, unrest in Egypt, and production disruptions in the U.S. and other countries push up the price of crude oil and gasoline. The national average price for regular unleaded was $3.67 a gallon on Friday. I bought gas, I believe Friday, here in Phoenix, and I paid $3.59.
That's pretty good.
That seems reasonable.
Yeah.
It was at $3.64.
Well, AAA says that the current average is 23 cents higher than it was at the same time last year, but still below the all-time daily high of $4.11 a gallon on July 17, 2008. Expect prices to continue to rise in the coming weeks. And it could get even worse with the hurricane season coming on.
Mm-hmm.
There you go.
Yeah, no, I think you're going to see. I think you're going to see the higher prices.
Hey, and how about that gold? I mean, we'll talk about that here in a minute, but it got back above 1,300.
Oh yeah, no, they're.
Yeah, we'll talk about gold here in a minute. Don't want to spoil anything. Spoiler alert: we're talking about gold. Let's see if there's any questions in the chat box. Anything anybody wants to talk about specifically.
We had a
David,
good Coach's Corner Friday. Good Coach's Corner Friday.
David, in your Spark, you may wish to be struck by lightning?
Because it will help me, it'll recharge my battery, is what he's saying.
Oh, I got you.
So that's one of the benefits of, if you're in a place that rains a lot, your electric car will get recharged by lightning, and you can drive another 200 miles. It's fantastic.
Gary poses an interesting question. What would happen to the price of gasoline if 30% of cars were electric?
Well, a very interesting question, and I'll tell you what the oil company's position on this is. First of all, the oil company has not, as most people that are conspiracy theorists believe, they have not sent out the black helicopters to kill the people who are designing and developing electric cars, since electric cars don't use any oil at all. They're, other than perhaps some of them may use an oil-cooled electric motor, but that's a very small amount of oil, and it's permanent. It doesn't get changed or anything like that. And other than brake fluid, they don't have any fluid. So the oil companies, as opposed to going out and killing people, like we've been told the conspiracies are, what they're doing is they've figured out that electric cars are, or that the gasoline cars are going to dominate the industry until at least 2030 to 2035. What they may, and they may end up being correct, dominate meaning that there will be more of those than there are electrics. But I have my own feelings, which is that it's going to be a while yet before electrics take a big chunk out of the market. But I can assure you of this, that they're already climbing by leaps and bounds every month and every year, the amount of people that are becoming turned on to this and understanding the benefits, and understanding also as well that whatever limitations there are, many people have two cars. Some electric cars even come with a 12 rentals per year that you can get from Dollar Rent-A-Car or whatever, and if you're going to take a longer trip. But most people are starting, or a lot of people are starting to get a better understanding of what the limitations are and how those limitations actually work for them. This car that I have, this Chevy Spark EV, will do about 100 actual miles. Well, I can go an awfully long time driving around the city without having to worry before I get anywhere close to even 70 miles. My task done. So I can use that car for just about every single day. And then over time, these things will get bigger and better and so on. But the oil companies believe that they don't have anything to worry about, but they do have a lot to worry about. Some of the things they have to worry about are this. It's not only the electric cars that are coming, but hydrogen is being worked on tremendously, and hydrogen is going to be something that powers electric motors. Natural gas is coming. That works in your normal engine, and natural gas is a very, very viable way of driving around, but it does use the piston engine. And the other thing that they're not taking into account is that the demand for electric cars will pick up as gasoline prices, if they do, continue to go higher, and that people will enjoy, and this is the big factor with me, once you've driven an electric car, you won't be going back to a piston car. And I can assure you that. So just the sensation, the pleasantness, the quietness, the thrust, all the things, the immediacy of it, it's just too compelling. And that's what got me sold. I wasn't a big green person or trying to save on gas, but I will say this, once you are driving around in one, you just completely forget about gas stations. It's not even an issue. What you do start thinking about is when you get down to your last 30 miles or so, you do kind of want to know where the charging stations are, or if you're or if you're going to go back home or whatever. You do want to keep an eye on that because it is a real limitation, and it really can be understood and utilized to its best advantage. We're so used to gasoline, you can drive anywhere and do anything you want. But if you take a look at what you really do, the average guy drives 33 miles a day when you average it across the entire nation. Some people have a 100-mile commute, but you average all that in, and it's 33 miles per person every day. So there you are.
Help me understand a little bit of the thing there. So do you go for a tune-up, or what is the maintenance on the car itself?
There is no maintenance on an electric car. Zero maintenance on an electric car. Now hold on, let me finish that. The brakes use normal brakes, except that the method of braking is called regenerative braking, and so when you lift off on the gas pedal, it engages a generator, and that generates power for your battery, but it also, in doing that, slows the car down, so your brakes last 100,000 miles. There is no maintenance on the motor. There's no maintenance on the transmission. There are no fluids to change. I've been through this all the time. There's basically no maintenance. Now, if something breaks, obviously that needs to be maintained. But you do have windshield wipers. You do have your little turn mirrors and your turn signals and things that if something went wrong, you'd have to, bulb goes out, you have to replace it. But if you think of how many times you've been into the station, whatever, your dealer to have things fixed, those things don't, that doesn't have to happen on an electric car. My Chevy Bolt has 23,000 miles on it, and there's no service needed for the entire term of the lease. It's 36 months. There's no servicing. There's no time. There's no other than rotating the tires, which I do.
Oh, so that's the only thing you've done so far?
That's correct.
Is rotate the tires?
Yeah, that's it. And that's $12 if you bring it to them.
I'm going to have to check this. I still need a ride. I'm still waiting for my ride.
You come out and go have sushi with me, and I'll zip you around the block, and you'll see how you can take it. It's like an amusement park ride with me, so you'll see.
May have to be this. Maybe this. You may have to come through with that this week.
All right. Well, I'll be here. Believe me.
Okay.
I've got the momentum of 34 years behind me here, doing the same stuff, so I'll be here. Anyway, so we're basically, we're still in the storm period for the week here, and hopefully we'll get a little bit more rain, but it's always special out here in the desert because when it rains in the desert, it feels unusual, it feels special. You literally can feel the electricity in the air, and it's a very powerful storm that we had, but it changed the weather, and it made it so that it's very pleasant right now in Las Vegas.
And if you happen to go into the desert, which I do on occasion when nothing else is there, after a storm, you would be so amazed of what springs out of the ground from the littlest, tiniest bit of water. The most incredible flowers pop out of the ground, and it's spectacular. The beauty
Absolutely.
of the desert.
Yeah, the beauty of the desert, and then they all die because it is a desert. unfortunately. But anyway, so that's basically it. I don't know if there's any news of importance, Dwayne, that you wanted to cover, other than the unfortunate bankruptcy of Detroit, which will have to be handled. You know, we can give billions and billions to countries that don't like us, that hate us, that don't do what they say they're going to do, that abscond with the money. We're just ready to do that. But one of our own cities goes just about out of business. You know, helping, yeah, well, you know. I'm just telling you, we have everything on backwards in this country right now.
Yeah, we sure do.
I am sorry. You know, you know, President Obama may be a political genius, but he has no idea of what to do with situations. He may be a political genius, but he does not know. That's not the same thing as knowing what to do in situations. He knows what to do to keep himself in power. He knows what to do to energize his base. Those are not fixes for the economy, for the divisiveness, for all this stuff. He doesn't know what to do. We're 5.5 years into this thing. We've been waiting for the recovery, Mr. President, that you promised us when you first said that if we do the $1 trillion whatever stimulus, all that stuff. It's all not worked because this is not really what you do. What you do is stay in power, empower your base, try to keep your people in the office after you leave. That's what you do. But you certainly don't do fixes because we haven't seen anything yet. How are you doing? You know, we haven't seen anything, and it's been 5.5 or whatever number of years. So.
The other news, let's take a peek and see what we got. Gold jumps to a 1-month high. Let's just go ahead and cover that. Gold hit its highest in a month on Monday as a retreat in the dollar pushed prices through tough resistance at $1,300 an ounce, as fears evaded that the U.S. Federal Reserve will soon curb monetary easing. Buying gathered momentum after prices beat chart resistance at $1,300 an ounce, a level they repeatedly tried and failed to break in the last month. That took gold as high as $1,322.50, a level last reached on June 20th. And for us, we had, let's see, where did that go? We had a tweet to consider being long above 1305 on gold. So for those of you that were able to participate in that, good for you. Now, Fed Chairman Ben Bernanke's assurances last week that any withdrawal of U.S. quantitative easing, a major driver of gold prices, would depend upon economic conditions, had already prompted a second week of gains in gold and continued to underpin the market on Monday. You know, that's really not even the interesting news. Here's the interesting news about gold. Let me get back to that. Now, you got to read between the lines on this, guys, and I know we're going to say, oh, conspiracy. The U.S. Commodities Market Regulator has put Wall Street banks and other big traders on notice for a possible investigation of their metals warehousing businesses following years of complaints. Now, on the surface, this appears to be about inflated prices and the cost of warehousing, but this amounts to a warning shot ahead of what is probably a formal CFTC probe. Now, we've said for a long time that these receipts that people are handed, these warehouse receipts that say, "Oh yeah, you got some, yeah, you got some gold over here. Don't worry about it, man. We got you covered." We've said be very, very wary of this because you may think you own gold, but unless you actually have it in your possession, physically in your possession, you don't know for sure. I mean, you just don't. And I'm not saying all warehouses are crooked, and I'm not saying that. I'm just saying that what I've said. If you have a warehouse receipt for physical gold, all you have is a piece of paper. You might have some gold too, but you don't know. And here's what prompted this thing. People who have, how dare them, actually requested to get their metals have been stalled for as long as a year. In other words, a guy says, hey, here's my receipt. That's my pickup truck out there in the lot. I'd like my gold now. Oh, well, we're sorry, sir. That doesn't work like that. What do you mean? Well, you know, there's a list and blah, blah. So, yeah, up to a year. Now, which country was it? That's Germany. Germany told the U.S., we want our gold. This gold that supposedly the U.S. government has, you know, in the vaults down under the city of New York. And they even said, we know this is taking you by surprise, so we're going to give you a year to get it together, but we want our gold. It was within 24 hours after that request came through that the price of gold began to tank and led to this huge sell-off that we've seen. Now the CFTC is saying, you know what, show me the gold. That's what it's coming to. And guys, if this thing unravels the way I think, and call it a conspiracy if you will, but if it unravels the way I think it's going to unravel, the price we see on gold and silver today is a fraction of what it may be in the not too distant future. Now, on the other hand, Elon Musk may be able to mine gold out of an asteroid, okay? And so that might make the price of gold plummet. But this is going to be very interesting to see who ends up potentially going to jail or how deep this is. I mean, Goldman Sachs is involved, JP Morgan's involved, and I'm not the London Metal Exchange, and I'm not reading this off of some nutcase website. This is mainstream news published by Reuters today. So this is the real deal. And we'll see what happens. In the meantime, as we've said for a long time, our long-term position on gold is bullish, and it remains so.
It certainly lends itself to some funky stuff, doesn't it?
Yeah. Oh, and one last little piece of news. If you go for a pedicab ride in New York City, be careful if you pay with Square. Now, I've been a big proponent of Square. I wrote an article for the Motley Fool about Square, and it's such a great, clever device. It's a little thing. You pop it into the headphone jack on your iPhone or iPad, and suddenly you're able to, like a big boy merchant, take credit cards from your customers. At a yard sale, at the flea market, it's a wonderful thing. Here's the little problem. I mean, it's a bonus to small businessmen, but to the consumer, what are the qualifications to get one of these merchant accounts? If you can fog the mirror, you're approved. I'm serious. If you can
No,
fog
I know.
the mirror,
I
you're
know.
approved.
I know.
And so what's happening is, like the pedicab guys and other people in New York City, you know, here come a bunch of drunk tourists at 2 o'clock in the morning, and they need a ride somewhere. Okay, so they zap them for however much. The drunk guy signs it, and then the drunk guy maybe doesn't check his credit card statement next month or for 2 months, and maybe never. And how are you going to find the guy peddling the pedicab? Well, but he had an account, and, well, yeah, but that account's been closed because over the course of 2 weeks, you know, he ran up Lord knows how much, and now he's already opened a new Square account under a different name. This could get ugly. You just got to be careful. You got to, and I'm the worst in the world for this, and I'm trying to make myself do the right thing. I pay my credit card bills in full every month by the grace of God, because I went the other, I slaved to pay the debt on my credit cards for a good portion of my life, and that was a horrific way to live. Now, by the grace of God, I pay my credit card bill each month when it comes in, and I don't spend, if I can't afford it, I don't buy it. That whole thing we've talked about. But I don't go line by line. I look at the bill, and if it seems reasonable, I just pay it. And you should go through your credit card statement line by line by line, and because, I mean, it's very easy for a restaurant to make an honest mistake and charge you $150 for that $50 dinner. I'm saying honest mistake. Now, forget about the people that set out, you know, to take advantage of you. So, I don't know, do you, David, do you have an accountant do it for you, line by line?
Well, I have somebody that does my bills for me. I do. And I am a proponent, I've talked about it on the program, that you should pay your credit cards in full at the end of every month.
Right.
That will help your credit rating dramatically. I used to think that credit meant your ability to pay over time.
Yeah.
And that's what they were measuring. And I was completely wrong. Credit is the willingness of banks and institutions to loan you money. That is credit. It's not your ability to pay it back over time. It seems odd, but it actually is the opposite of what I thought it was.
But the question on the table is, do you go through your bill line by line every month to make sure you've not been erroneously charged something by somebody?
No, I don't go through them line by line. Now,
see,
if I had a question,
everybody
I
should.
would, but I don't.
You
That's
would be
the thing. How do you know if you have a question or not?
You would be so surprised the mistakes.
I don't, because I do have somebody else doing it, but that person knows what the normal stuff is that I do, and she might say, hey, you know what, just for your information here, there looks like there's a little something weird here. That's what would probably be the case.
I know that on my credit card statement now, I have a number of automatic monthly payments for one's $1.99 and one's $9.95, and honestly, I do not remember what those are. And and sometimes the vendor or the vendor doesn't put their phone number on that line item.
Yep.
So it's difficult to track it down. One time on one of my cards, it got so bad, I just called up my credit card company and said, I want you to issue me a new card with a new number. They said, did you lose it or something? And I go, no. I go, but I believe I can request. And they go, yeah, you can. They go, but you know all the people that you automatically. I go, yeah, I know. We're going to cut them off at the knees because I can't figure out who they are. They said, okay. So they sent me out a new card. And,
I'm not big on those automatic things. Those automatic things can be really a challenge to find out. And you would be surprised at the number of errors you do find when you check.
Really?
You would be
so
really
you go line by line.
I go line by line.
Errors?
Yeah, because the accountant then puts it in the right place, and I want to be sure she's putting it in the right place. So I go line by line, and I keep the business cards with one place and the personal cards with the other stuff.
Right.
So I can check it, and I scan in the receipts. So I have my receipts. My receipts also are by month and by card. So if I do forget like that, I can go back and say, okay, what the heck did I do? Because I don't
have
remember.
one of those little tiny scanners?
I had it. I had the neat scan, and I ended up returning it because I found I could do the same exact thing with my copier, color copier.
Yeah, because they've got them on sale at Staples. I almost picked one up the other day.
No,
it just looks so
don't even waste your money.
So easy.
No,
my printer, it's such a hassle scanning and naming and.
Yeah, but it's the same thing. I mean, you're doing the same exact thing. You're still scanning and putting the things in there, and you still got to sort them, and you still got to put them in the right place. So you don't get around anything by getting it. I thought you did, and I tried it for a while, and I said, there's no difference. I said, so I ended up just returning because it's like $400. I mean, it's not cheap.
Oh, this one's like $79.99.
Yeah, well, see, then that's
it's about the size of a ruler. And it just sucks the paper right through it.
Yeah, you still got to sit there.
Could you make that sound one more time, Dwayne? That's very technical. Oh, that's good. This reminds me of Star Trek, the doors opening as they walk through them.
Oh, yeah, that's a nice sound. It is. Yeah. I like that.
It's a very important sound.
So you guys want to go to the markets or what?
Yeah, let's go to the markets.
We can go to the markets.
I want to talk about something, an old one that we talked about before. I want to bring up later.
All right.
Okay.
When you guys are done.
Okay. Let's. We'll definitely do that. Okay. Let's get into today's session. I can't. Hold on. Stay with me 1 second, Dwayne. Let me just get something set up here. Okay, I'm ready to go. I'm sorry about that. Somebody in the office here has a son who, a baby, not baby, but about a 4-year-old who unfortunately had a, believe it or not, and these kids can get into anything, but somehow a very heavy TV fell on this child.
Oh my
and,
gosh.
I know. I'm still not even aware of how that even happened. But it did. So that person.
What was that? I just missed that.
Well, you know how kids can get into anything, and this child somehow had a 100-pound, I don't even know whose TV is 100 pounds either,
Ooh.
but a 100-pound TV fell on the child somehow. I don't know how, but somehow it did. And he went to the hospital, and everything seemed okay, but the person has to leave now to go check out, because there's a potentially there's a medical issue, so they're going to go check it out. That's unfortunate. So I remember when I was young, I remember I was at a restaurant, and I full of energy, ran, and it looked like there was nothing in front of me, and I was just going to run right outside, and I just ran straight into a big sheet of glass.
Yikes.
And I remember I think I may have chipped a tooth or done something. Everybody has that, when you're younger, something like that happen. I still do it. Even now, though. I'm 56. I'll still run into plate glass view, windows, and things like that. And I just tell people, listen, I didn't quite make it out of high school. I apologize. And then we move right on. Go ahead.
My story like that is I was at my grandmother's house, and she had some workmen. They were out in the backyard building something, and they were hammering. And so I snuck around and got a nail and a hammer, and I went inside, and I was having a difficult time hammering it into the wall. And then I saw this little electrical outlet where there was already a hole there.
Oh,
I thought, this will be much easier.
Oh, no.
Yeah, I lived. I survived.
Yeah.
Ow.
Yeah. Gosh, that must have hurt, because I remember when I was young, I was looking at the spark plug leads from a single-cylinder gas mower, and I had inadvertently was holding onto them as I turned the thing. Somehow that happened, and the current and amperage that I felt, I remember to this day, was the strongest electric shock I've ever felt.
Really?
So, yeah, it was really strong. So I can only imagine what wall current, if you got a good zap of it, must be.
Oh, yeah.
Probably no fun. But this isn't a program about the silly things we've done. This is a program about the markets.
Speaking of TVs, I keep thinking that new TV of mine is going to start to look normal. It's not happening.
Oh.
So I may.
Can you shut that?
It has ruined my TV watching.
You're kidding.
It's too clear, too clean, too perfect. It's just.
Really?
Yeah. Yeah.
Huh.
Yeah. It's weird. It's just weird. I go upstairs and watch my old beat-up plasma, because that's TV.
Huh.
I can relate to that. So I don't know. It's weird. The weirdest
This is
thing.
TV.
Hey,
Well,
how
I'm
about
still
that
watching
Netflix?
I still am using my old.
Oh, Netflix.
Go ahead. I'm sorry.
Netflix. They got 12 Emmy nominations.
Yep.
Now, this is non-broadcast TV. This is the company that was doing great. They made a bad decision. Their stock plummeted, but now they're on the comeback trail, and they got the big boys a little bit worried. They've got a new show, and this is too rough for most people in this audience. Orange is the New Black. It's from the people who did the TV show Weeds on Showtime. You probably know, some of you know that show. It's about the suburban mom that sold pot to earn a living, and I won't go there, but I just did. Orange is the New Black is about a girl who 10 years ago, she carried a suitcase with some drug cartel's money in it, and 10 years later they track her down and charge her, and now she's in prison for 15 months, but they're developing all of the different characters that she's in prison with. That's the storyline. There was a TV show many years ago. I bet 2 people in this audience don't remember it. It was a British TV show called The Prisoner of Cell Block H. Does anybody in this audience remember that TV
I do remember
show?
that. I do remember the name of the show, but I don't remember the show.
B was the top dog in Cell Block H, and I'm amazed that I remember that so long ago. this is kind of along those lines, but of course much more modern. And again, it's got rough language and rough scenery, and I was watching an episode the other day, and it just got a little raunchy, and it's like, you know, Dwayne, you were just telling people on the radio how they should be very careful what they let in, you know, through the eye gate and the ear gate and all that kind of stuff, and so maybe you shouldn't be watching this show. And so, you know, maybe I won't watch any more episodes, but I bet you Netflix is going to get an Emmy for that show too.
Well, if you haven't seen Arrested Development, you have to see that.
That's one of the ones that got the Emmy nod.
I know. It is fabulous. It is so good. I can't tell you.
I haven't seen it.
Oh, you have got to see it. It is so funny.
Is it raunchy? Is it nasty?
No. It's about this. It's about this real dysfunctional family who's and it's kind of trading oriented because the father gets put into jail by the SEC. So it's kind of interesting, but it is hysterical, just hysterical. Definitely recommend it.
The other one they got the Emmy nod for was House of Cards, and I can't remember. There was another one I thought they should have got an Emmy for, but they didn't. The one about that little town in Norway or Finland. It's where they held the Olympics some years ago, the Winter Olympics. And it's about a mob guy who turns evidence and gets in the witness protection program. Lilyhammer, that's it. That's the name of the show, Lilyhammer. There's like 15 episodes. It's a little rough too, but not really bad. And I thought that was great. My wife didn't like it at all. Anyway.
Well, there you are. Let's go over. Listen, we could just go on and on. I could say something like, what do you get when you cross a dinosaur with a pig?
No, you couldn't say that.
Jurassic pork. Little humor there. All right, let's get over to...
Jamaican me crazy, man.
Yeah, I know. Believe me.
Oh, my goodness.
Does anybody remember Ella Fitzgerald?
Yes, of course.
Okay. You remember Darth Vader?
Yes.
Okay, from Star Trek. If they got married, her name would be Ella Vader. Little humor there. All right, now we're ready for the markets. Okay. I told you, I'm good.
You are.
Right.
You really are.
Elevator.
Let's take a quick look at the S&P. Let's get started with the S&P today. You know, it is very quiet, and it is probably this is the normal summertime action that we see almost every summer. We have had, Dwayne was mentioning earlier, and it's true because of the unusual volatility pickup as we led into summer. You know, it was great. It was the good old days, and it was only going to last for a certain period of time. And we still may get some good moves. We will. But we're in the summer now. I mean, we're approaching the middle of the summer, the dead zone. And so this type of behavior is what it is. And you just have to look at other markets and realize that the big moves, whatever they are, they come quickly, and then the market becomes very quiet again. Hopefully, it won't be too bad, but as it sits right now, this is really good evidence with today's range. You know, the total range on the day is about 9 points, you know, including Globex. So we talked about the what was the average true range dropping to 8, and it's very close to that from what you were saying earlier. It may even go lower than that before. You know, it may even go lower than that before we're all over. But
we're at 11.9 today.
Yeah, I think we're going to see some lower ranges, especially as this big behavior continues.
Now that's on Globex. If it was just a day session, David, it might be.
It might be there now.
Yeah.
Well, today, including Globex, is the whole range is like 9 points. So we'll see what we're able to do with this during the day.
But either you were talking about today's range. I thought I heard you say average true.
No, the average true range. That's what I'm talking about. I'm saying that even I was just mentioning today's total range is that. But, yeah, the average true may drop as low as 8 during the summertime, and we'll just have to look at other markets or trade the little bit that we can get out of it. Yeah. But don't let it depress you. Don't take any special medications to get over the slow movement. It's just what happens just about every year, and it's seasonal by nature. And if you do have severe mental problems over it or blocks, you can always go to Robin Dane, and she'll help you get over those.
Now, despite the low range and low volatility, we did put in a new all-time historic high during today's session.
We did, and that's how
Earlier.
they've done that a number of times with this low volatility. They just slowly climb up. We're at 88.50 right now, and a little bit off that high. So anyway, we think this week is critical in the market. Those that are utilizing reflected wave, which is our turning point methodology, know about that, and we think that, and there are some important price levels that we're watching for really later in the week, how the market closes and so on. But as it stands right now with this type of volatility, although the day trading is small, once there is a top in, we are probably going to see a relatively important multi-week reversal. So in the meantime, until the market shows us otherwise, I don't suggest that people try to start shorting the market or doing anything with it here. I think it would be wiser to wait for more confirmation, and I know that in most cases, waiting for more confirmation usually means you don't get as much gain for your advantage, but there are times when you can. The market sometimes will retest an important level after it is confirmed at that point. That can often give you a very, very excellent entry, and that has happened to us just recently in some of the trades that we've taken, where we normally would wait for confirmation, we get it, and that means we would potentially get less out of the trade. But sometimes the market will give you that other retest, and it allows you to kind of get the best of both worlds. So that's my take on the S&P. I mean, we had a really nice trade on Friday with a 6-point gain out of a bottom that they put in, and that was, to us, we were amazed because it really is such a small movement that it's surprising you can get that, but we were lucky. We were able to get in and get out, and as it sits right now, we're leaving the market alone right now. We have our own levels as well that the market has come very close to testing. On Globex, or on in our panel, we were looking for the market to test or attempt 95 today. They have not quite gotten to 95 yet, but if you include the Globex, they got up to 94.25. We'll wait and see what happens there. But as it stands right now, we think this week is critical, or we're coming into the critical period on the upside, and we'll have more. Dwayne, if you want to throw something in on the, if you haven't already, or whatever you want to do on S&P.
Pretty much covered it. We had a target up here last night on our tweet at 95, and it could only get to 94.25. And all of our math and everything that we look at on Sunday nights to determine what the week's going to look like, this is exactly what we thought it was going to look like. Very low volatility, tight ranges. We had a nice slingshot trade on the way down, good for about 3 points if somebody stayed in it. And then on the way back up, we had another beautiful textbook, if you will, trade that went from right here to right here. So, I mean, even though I'm complaining about the low volatility or whatever, I don't know if complaining is probably not a good word, because we had a beautiful trade on the downside and a beautiful trade on the upside. So really, I don't know what more I could ask for. So I'm just going to be quiet.
All right.
Go ahead, caller.
Okay, if you want, let me show you some of the trades that do have some volatility. If you'll switch that over to me, Dwayne, on the charts, I'll take it and I'll show you a few that we've been able to do. This is the last 4 trades that we've had just since Thursday and Friday of last week. It's going to look a lot to look at, but start from the left side of your screen if you can see this. This trade was initiated on Friday on the left-hand side here by August Gold at 13.11. Now, at the time, the market was trading way down here at like 12.87. So we were talking about buying it, thousands of dollars higher than where it was at the time. But the forecast was to buy it at 13.11, take an initial profit at 13.21. Here's the entry right here. This is where we got triggered in today. There was a no hassle entry on this because there was no pullback, not even a point, and the market then went up to the 13.21 up here. Here's 13.21. 22.70 is the actual high. They pulled back from that, and then the final target at or near 13.41, and they just reached that up here with today's high at 13.39. We sent out a forecast to get out. This is a very, very good example of potentially buying in places where others might not, a normal trader might not want to buy because they're concerned about the risk and so on. We've talked about this, but everything that we look for that was set up in this trade was there, and so we took advantage of it. And like I've said so many times, if you're not given a protective stop when you're given a trade, it's not a trade, it's gambling. If you're not putting a protective stop in yourself, it's not a trade. You must use a stop on every trade, not to make the trade harder. It makes the trade safer, because just in case what you're looking for doesn't work out, this may have not worked out. It worked out beautifully, as you can see, but it may not have worked out. You have to have a place to protect yourself. We've moved our stop up all morning, or between Friday, not all morning, but between Friday and today. And for anybody who is sitting for any longer, or, we've reached 39.10 against our 41. That was good enough. We sent out a thing saying, grab what you've got up here. And but anybody that is holding, we've moved our stop up now to 13.11, and we'll see what we can do with that. That's gold. This middle one also was given out last Thursday. This is on the U.S. dollar, and we had a very important indication, we thought, on the dollar to short the September dollar at 82.75. At the time, the dollar was over here. It rallied up, got us in on this rally, and then rallied up to within literally about 6 or 7 ticks of our protective stop. So we came within 7 ticks of getting 6 ticks of getting stopped out. The market reversed at this level, and then we take initial profit at 82.46. Here's 82.46 way down here, and then the final profit at or near 82.11. Look at today's low, 82.13. So very similar in its own way to the gold advance. The dollar came down, worth a lot of money per contract here. The dollar is basically 10 points per contract. So from 82.75 down to 82.13, it's something on the order of $620 for that last one per contract. The gold, depending on whether you're trading the large contract or not, the large contract's worth $100. So, getting up to 39 from 11 is a pretty good move. That's worth about $2,800 per contract, and that's actually doable because that's where we actually got in, and this is where you'd get out. So that made it, actually doable. And then
you're breaking up.
Yep. Breaking up on this side. Yikes.
Hey, Dave, we can't hear you at all, buddy. Let me send him a text message.
You got a thing popping up, computer overloaded.
Let me send David a message.
Can you hear me? Can you hear me okay?
I can hear you just fine.
Okay.
I sent him a message through the go-to, but let me try shooting him one through a text message on his cell phone.
Yeah.
I'm going to suggest he log out and log back in.
Yeah. Is that his screen we're seeing?
Yeah, that's his screen.
Oh, okay. So he's got the overload message coming up on his.
Yeah.
Okay.
Mm-hmm.
Gotcha.
Can you hear me right now?
Okay.
Now
you're
we're
back.
good.
Yeah.
Dwayne, can you hear me?
Yep.
Yeah.
I can hear you now.
Okay,
Yes.
there is something going on my end here. I'm going to try to close some things out. I really apologize. Let me
that's
see
okay.
if
It
I can
happens.
close. There's a few things that are running that probably need to be closed. So give me just a moment here. It is still running really slow.
I mean, everything was fine just until, I don't know, 2 minutes ago. when you started breaking up.
Yeah.
There was no early warning
No,
that you were
it
going to
just
go
went.
bad.
Okay. The only other trade, one that we gave to Bert, that if you can see and hear me okay, we gave this trade out as well. Okay. This was on natural gas. For those of you that are utilizing reflected wave, we had a reflected wave top on natural gas on July 18th. This occurred right as the market was breaking out on the upside. So Bert and Bert Slichter from Daniels Trading, we told him to sell short at 382 for an important decline, that the market should have trouble getting through the 382 level. Subsequently, the market made a high at 383.50. He got out at we got out at 366. So this was a good example of a trade where we got within a point and a half of the exact swing high and 2 points of the exact swing low. We had a nice swing down in natural gas. And natural gas, this market pays sizable money. This is a decent move on the daily chart in natural gas. So those are the main trades that we've taken. And then Dwayne, if you want to, I'll switch this back to you. Do I go to organizer, or that's what
I'll grab it, David. It's okay.
Okay. Go ahead and send me that.
I got it.
Okay, there you go.
There
you go.
Now,
And then,
here's that gold trade, guys. Here's what it looks like on a 1 minute chart. This is where the market opened back up yesterday afternoon. This is on the 21st. This is when Globex opened. Globex opened right there. Okay, on this candle, that's the Globex open. I can finally hear your worker, your construction.
yeah, they're in the background there.
Yeah. Okay, so we had, let's see, that price, we closed on Friday. Let's see, Friday we had a closing price of $12.95.60, and then on Globex last night we opened at $12.96.20. And so based on our methodology with the slingshot, the entry was right there, and we never risked more than 8 ticks on a slingshot trade. So as difficult as it may be to bite into it, you had to really be on your toes. I mean, did most people catch this? Probably not. But I mean, there was the break higher, I mean, all the stuff we need, the bullish cross, the pull away, the pull back, the up close. But it would have been this candle that you got in on, and you walked right into that.
Wow.
I mean, I've got this thing set, dialed back to 1 minute. So here's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes, and then was there some kind of news, Bert? Are you there yesterday? That's 1 minute.
No,
in 1 minute, we went from 12.97 to 13.10. We went up $13 in gold in 1 minute.
Wow.
And then we ran up from 13.10 to 13.19 in the next minute. So that's 13 and 19. No. 13 and 8. So $21 in gold in 2. Did I get that? Did I do the math right?
Yes, it's pretty close. It's pretty close.
2 minutes. Wow.
Yeah, it moves. It definitely moves, and if you're not already set up, in most cases, for the trade, either by having a buy limit or perhaps having taken that one particular trade, it's very easy, obviously, to miss it. You have to have been in the game, buying and selling right at that time, or having a buy limit in the market, which is what we did, a buy stop actually, what we did to get into the trade. But all these markets can move very, very quickly, and even though the S&P is moving very, very quietly, it doesn't mean that there isn't excellent volatility going on in other markets. And having said that, let's take a couple other markets that we'll take a quick look at. The gold we're through with, and the U.S. Treasury bond market. I'm very interested in continuing to watch how this market handles its critical levels, because several days back we were long in this market with an exit at or near, I think we went long at 130, 411 for a trade up to 135.30, and they got up to 135.28, again missing it by 2 ticks, and then they reversed, and we had a completion of the trade there. Today they did test 135.30, and today's high is 136. That's about going over it by about 2 ticks, and they're trading lower now. So I tend to think that if we close today below 135.30, that is the weaker position. We may take some action on that in our own trading. If someone wants to get some of these trades and watch them or trade them through, you can give us a call, 888-231-4702, and you can take 2 weeks of these and check it out and see if this is something that and you do have to check with your broker about margin requirements, because obviously these trades require an overnight trade. So you just want to keep that in mind. And then let's see, what else do we have? Let's move on to the euro. The euro in many ways is the opposite of the dollar. So we are at this point not doing anything with the euro, but it has had a nice advance commensurate with that dollar drop that we traded, I showed you earlier. And for me, the dollar was an easier setup or a clearer setup. For another person, the euro might have been one. But this was very good. The euro continues to advance, and how they close the week will be important to us, and it may give us a reversal signal in both markets. We'll talk more about that potential as we get or later in the week here. Over to the crude oil. This is a market that recently completed our largest forecast in 13 years, which was for a $24,000 per contract move. It's not that you would have gotten all of that or even any of it, depending on what you did with the information and where we told you to get long and so on. But in the end, from swing as a swing, it's a $24,000 swing from $85 a contract, forecasting that the market would ultimately get to 109 and change. They got up to 109.32, and today we have declined. In our meetings, I mentioned today that they would drop back to the 106 level. Today's low so far has been 106.43. And so we're not going to do anything with crude likely until tomorrow, if we do anything with it.
Are you in September?
We are finishing out August. We're no longer in a trade, but we are moving over to September.
Because we switched over to September in the live trading room today.
Okay. Yeah, it's time to switch. It is definitely time to switch. But we're not in a trade right now, so we'll switch over and we'll mention those numbers as as the stuff goes on.
Okay.
And then a couple of interesting things. We're not touching silver. We are watching and continuing to forecast.
How did that perform today?
Nothing. I mean, silver's been very, very quiet. Very, very quiet. It's up. It's up a little bit, but it's very quiet.
With that huge move in gold, you would think there would be some carryover effect.
There is. It's just not a big. It's not a big deal.
So the low, 1975, and the high, 20. So $3. Okay.
19. The low is 18.8. Oh, you're talking about the low today.
Yeah, the low today. Yeah, today's low just on this
I got you.
Globex candle. I've got 1975.
Yeah, we've purposely been leaving
2053.
Yeah, we've been leaving the silver alone because gold has acted much, much better as a trading vehicle, a trading instrument, than silver has. With regard to the Australian dollar, we've been forecasting that the month of June plus a month would be a bottom. This is a reflected wave bottom. So it looks like it's a 1 month late bottom, and we've not taken advantage of this yet, but we are looking potentially to do something with that. There was a report out a few days back. A Goldman or somebody came out with something on Tesla, and it sent prices dropping. This is the stock Tesla, the electric car.
Right.
It had a big decline, and they have recovered the majority of that, or a big portion of that decline so far. We're just continuing to watch them. I think Tesla has a lot of potential still, but we've had a 400 or 500% move up. So we're unable to we're not going to do anything with it right now, but we have had some nice setups and trades on Tesla for those of you that are into watching the stocks, which is a big part of what we do, is trade these stocks. So let's continue on.
Robin, well, I've got the start shot. That's easy for you to say. While I have the stock chart up, you said there was a stock you wanted to look at?
Yeah, a couple actually. First is the Zynga.
Yeah.
I like Zynga. I'm watching the 330 level, 330.
Okay.
And interestingly enough, there was a headline that came out of Chicago, out of investorsobserver.com, releases stocks to watch, and they include Netflix, Tesla, Polta Group, Zynga, and Bally Technologies, which was kind of interesting because they're right in there with the Tesla and the Netflix. So they have Zynga on that list. Okay. And then, so it is pulling back right now, but I'm watching the 330 level. And if you go to a 5-day, I'm hoping it's settling it. It's going to settle out right here. So that's what I'm watching. So that's on the Zynga. Now, if we go to, remember we had looked at soda, and remember we had that pullback in soda. If you have that real quick, SODA, and if we go back to the 5-day, last Tuesday we had a pullback, then it started to head up again, then a slight pullback, and we've been up for the last 2 days, Friday and today. We're heading back up again. My number there is I'd like to see that get through the 60 and stay above it. It did cross it today at 680, but I'd like to see that stay above that 60. And that seemed to be settling out there at around 57.50, or just right around that 58. So, so that's that one. And then one from the past that I'm going to look at again, which I'm starting to get real excited about again, and I may get into this one, is the Kong, K-O-N-G.
Oh, yeah, you haven't mentioned that in quite a while.
I know, but I've been watching it. I've been watching it for quite a while. It's just had, like I said, in the beginning when I first started looking at it, it was like $3. Mm-hmm. And that was a while back, and it's now.
What do these guys do again?
This is the Chinese, the People's Republic of China, and the company operates 3 business units: mobile gaming, internet games, and WVAS, and I'm not quite sure what that is, but they're very known for their gaming. And again, because of the cell phones that are now being introduced into China and that business really growing, what's the first thing people do is they put the games on the phone. Yeah. So that was my thinking on that one. Although the volume, I'd like to see the volume a little bit better, but it's just ka-ching and ka-ching and keep going up. I may actually get back into this.
Well, the volume's 290,000, so.
Yeah, I mean, I like to have it over 1 million. I mean, it's not a big runner, but I like to have on average 1 million a day is where usually my criteria is. But this is just like a nice slow, ka-ching, ka-ching, ka-ching. So I may be getting back into this.
Speaking of games, check this out.
Mm-hmm.
You go to the blog page, guys. And then down here at the bottom.
And remember, you can go to the blog and go to the Coaches Corners and go through the Coaches Corners that are archived.
Get out. Okay, let's see if I can make that go away. There we go. Yeah, let me just go to a different window. Oh, it won't go away. I've got a little button back here, and I can't. That's the first time that's happened to me.
Yeah.
What in the world? I'm so embarrassed. On live radio. I had a new toy to show off.
No.
Yeah. Yep. I'm not giving up yet. One more. One more. Let's try this. Okay, let's go there. Oh, I know what it is now. Let me just...
Again, if you're new to CFRN and you haven't, and you wanted to check out some of the Coach's Corner, which is the psychology part, you can go onto the CFRN.net website, go to the blogs, and they're listed there under the Coach's Corner. It'll give you a whole bunch of psychology. We do them Fridays. If you'd like to have a topic specifically or your challenge, we had a great session last time of people putting in their challenge, and we just kind of had what I call an open session with whatever challenge you have in your trading, and we'll work through it during that Coach's Corner, 3 o'clock on Fridays, and we look forward to having you there. It's all open to everybody.
All right, I'll take one more shot at this. It really is cool. I wouldn't put you guys through this. Honestly, I wouldn't.
And we're waiting for the baby. We're all waiting for the baby.
Ah, there we go. Right here, guys. See, play games right here. Play games. Let the games begin. Speaking of games. Now, here's what's really cool about this is you can play games with anybody that you know on Facebook. If you have a Facebook friend, okay, you can connect with Facebook. Or if you just want to play chess or checkers with a perfect stranger. You know, I don't know if anybody's perfect, but here's what happens. See, you just say play now. This thing will find you somebody. There's 172 players online. It's going to go out. It's going to find somebody, and then you play live. And then there's a little chat box so you can have a conversation. I was playing checkers the other night when I installed this with some guy from Germany. He just tore me up. But I won't wait for the whole thing to load. But the good thing is you don't have to install, you know, software. You don't have to. It's safe for your computer. You don't have to worry about getting any virus or anything. See, now it's just searching for someone in the lobby, and all of a sudden this person will pop up right there. See, there they are. Okay, and it's loading this person. Now, I could go here, play with a friend, and it would hook me up. I could pick any of my Facebook people. Which one's me? All right, well, we won't tie it up any longer. But if you're waiting too long, you can go to the lobby and pick somebody else. And it's really cool. And there's all these different games. Okay, chess, checkers, backgammon, a ton of stuff, and it's free. I've already paid for it, so you don't have to. Now, you can register if you want and do other stuff, but you don't have to register. You don't have to. And be careful, because if you go into a game and have chat with some stranger, I can't be responsible for their conduct. If somebody says something, you know, that's out of line, then you just close the window. And if you allow your kids to go on our site and use this app to play games, it can be very culturally stimulating for a child to have a friend in, say, China, you know, that they play games with and stuff. But you have to monitor it very closely and very carefully, because we know there's a lot of sick people out there on the internet, or in the world in general, but on the internet. And so I encourage you to let your child go and make friends with someone age appropriate. And that's hard to tell, because sometimes these characters can pretend to be who they're not. So just use your own parental discretion. But what a great way to, you know, have some fun, play a game, especially chess. I would love to. I've never learned how to play chess. And obviously I'm not that good at checkers, because this guy just tore me up from Germany. But anyway, guys, have fun. It's paid for, it's free, and it's all yours.
I'd love to play with you, Dwayne. That's been on my list too.
Okay. Well,
And so we should do that.
my son could teach us.
Oh, that would be fabulous.
Or do you already know how to play?
No, I know very basic, but
I bet David
really
Williams is like a chess champion, chess and table tennis.
No, table tennis, yes. I do play chess.
You do?
Well,
I do enjoy chess, and but that's just something that you have to have a chess player to play with, or a computer like one of those games.
Yep.
I think, Dwayne, that's everything I have for today. Yeah. Yes, Wei. And we do have some. I think the week is going to be important and interesting. Even though the volatility is slow in the S&P, I think there are other markets. It'll be interesting also because the S&P is coming to this critical juncture, but it's not necessarily over on the upside. We could see substantially higher prices before all this is over. So I'd be careful. Those of you who just can't wait to short it because whatever you're looking at is telling you it's going to come down, I'd be very careful with that. I've been saying that for literally half a year, and I hope that has saved somebody some trouble. Go ahead, Dwayne.
Bob G has a question for you. Did David say that this week is a reflected wave for the S&P? He didn't say top or bottom.
No, it is. We're at a very critical juncture on the upside for this week, and so we do think that with the market having put in new highs and so on, and it may not be done, and I don't think it is, that we're using caution with that indication. It's only Monday, so obviously we're not as excited about doing something with it as we might be on Wednesday. We want to see the setup lay out the way that we like to see it. I've said this before, but all of the variety in life, everywhere you look, all the little strange creatures above the ocean and below the ocean, and all the strange formations and all that stuff that we know is the whole world, all of that diversity is also in the markets, but it only has three ways to express itself: up, down, and sideways. And that's kind of why the market's always different, because it's trying to express that same wide range of diversity through just a three-movement kind of thing. And so for us, we know that this turn is going to be different from any other turn, and we have to we want to get it right. These are larger time frames we're dealing with that a person can really get it wrong, and if they stay wrong, remember, the sin isn't being wrong or having a bad trade. The sin is staying wrong. That's the real sin, because anybody and everybody is going to be wrong sometimes in trading, and you have to protect your capital. Remember, it's capital you're protecting, not your ego. There is a difference. Your capital is what the purpose of that stop. You're not stopping yourself out so that you can say to yourself, well, thankfully I got out. No, you're stopping yourself to protect your remaining capital, which you worked hard to grow. And you don't want to throw that away silly and stupid on a single trading idea when they have shown you that you're wrong. You want to allow them to show you that you're wrong, get out, and then take your next trade. And that's the right way to do it. Can you get away doing it the wrong way? You can for a period of time. And then after a period of time, the market will show you that that's not a good idea. And it'll show you that by having an extended move that you'll be stuck in, hoping for the market to come back. This should not be something that you're sitting around hoping about. The market is not a hope mechanism. Other people trade it that way. But if you trade it and utilize hope as your main theme, it doesn't work out so well. Go ahead, Dwayne.
I was going to say, Friday afternoon in the Coach's Corner with Robin, as you recall, Robin, one of the questions from one of the listeners was, how did he word it? I have a problem honoring my stop. He worded it differently, though. But what it amounted to was the way he phrased the question told us immediately that he was not using a hard stop or a bracketed order.
Yeah.
And, I mean, several people from the audience, they typed in their answer to his dilemma, and that was just really, just quite simply, you have to use a hard stop on every single trade.
Yep.
And
Imagine oh, go ahead.
Go ahead. No, go ahead.
I was just going to say, just as an example, to show you how ridiculous it is to not use one. Imagine an insurance company that let's say you got into a car accident, and you call your insurance company up, and the insurance company comes out, you say, yeah, here's the bumper. See, check out what happened here on my car. The guy says, oh, yeah, you got some damage there. Yeah, that'll be $1,800 there, and you got a little stuff under here. And then the guy says, yeah, and I've got some damage on the other side of the car here as well. and the insurance man says, well, that wasn't part of this accident, right? And you quite honestly say, no, it wasn't. It's just some damage I'd like you guys to repair. Imagine the insurance company saying, okay, well, there's no problem with that. Let's just put that in there too. That's $2,200 right there. And then you say to him, listen, I also had some water damage on my roof a couple months back. You come on in here and let me just show you where that's leaking. See right up there? See how that paint is all kind of bubbly there? That's from the water coming to you. Could you guys cover that as well? And the guy says, no problem. Maybe just make a note of that. They have no stop. They're just taking unlimited risk because you're asking them to do things and they're just agreeing to it without a stop. That's the same as if you don't use a stop. Professional traders use a hard stop, an actual stop. I don't want to hear anything about your mental stops. You're mental if you use a mental stop because you're not going to honor it. It's going to get away from you. You're going to go back into hope. And my point before was this is not something you should be sitting around hoping with. If you find yourself doing a lot of hoping in the markets, that's not what you're supposed to be doing. You're supposed to be trading off of high probability indications, using a stop, protecting your capital, and trading to targets. And if you can do that, then you can call yourself a professional. And I can tell you that many people who do call themselves professionals, some that I deal with, do not use a hard stop. And they will have to, unfortunately, learn to do that. And it is not the easy thing to learn because once you've made that decision, now the market has to prove to you how wrong that decision was. And it'll do it to whatever degree it needs to get you to wake up. And so it doesn't matter what size of a trading account. I've been through it all. Believe me, I've dealt with people that have, $5 trading accounts, $5 million trading accounts. It makes no difference. It comes after you, and it'll teach you that lesson. It's just the way the markets work. It's actually just the way human beings work. You're begging for a spanking, and you get here's one. You get exactly what you pray for in the markets, and you're praying for a spanking if you're trading without a stop, and they'll deliver it. You will get delivered, but what gets delivered isn't so good.
And even if you're the person who's sitting there going, well, I'm not like the other guys. I have a mental stop, but I'm actually going to honor mine. Okay, fair enough. Let's say you actually are and you actually do. In a fast-moving market, think about how much time it takes you to put your glasses on, get over to the screen, grab your mouse, and make all of the necessary clicks, whatever it might be on your platform, to actually enter the order that's going to get you out. I mean, a lot can happen in a fast-moving market.
Well, the 2-minute gold trade, the 2-minute gold trade, the 2-minute gold pop.
Perfect.
I mean, there it is.
Perfect example.
So your short was up there, you're shorting it, 2 minutes, you don't happen to be there, it suddenly pops up. I don't care what your mental thing is. You're mental. You're not going to be able to protect your capital. It's already happened. Your capital is already not protected. And then you're going to have to sit through the run up to 40, which is what happened, and then your position is wiped out and so on.
Right there. I switched it out to a 2-minute chart. It's right there, guys. This happened in 2 minutes. 2 minutes. So,
Yeah. So anyway, so keep that in mind. It's not to depress you. It's just it's basically to embolden you and make you realize you can do what. Here's how you be professional. This is how you act like a professional. You protect your open capital. You know you're going to have to put some of it at risk in your next trade, and that's what you're agreeing to do. But you don't put all of it at risk, and you don't let the insurance man, the insurance company doesn't send the guy out to take on everything that's ever happened to you in your life and pay for it because they have a stop. Right. So. Anyway, so that's basically it. It should be an interesting week. Robin, if I have any psychological problems, I'm going to come visit you, and you can work on me real good. Fixing me all up.
All right, good.
Okay. I would like to take actually both of you at some point through one of my processes to break a block and have you experience it for yourself because I think you would be very you would know, especially both of you actually would know, that you would feel and know the difference once
especially
I did
Dwayne.
that. No, I was going to say especially you, but I changed that to both of you because both of you show signs of blocks. They're different. They're both different. But it would be very interesting because you're so aware of what's going on, how you interpret what happens after, because I think you'd be very, very surprised in going through it yourself and have a better understanding of of the power of it, of breaking
Well,
the block.
like I've said so many times, I'm high on my own neurotoxins.
I know.
And I think I need help. So,
Well, you know,
anyway.
it's funny. You know, it's funny. People equate having something wrong, and that's really not the thing. You know, you don't necessarily have something wrong that you've been doing bad for a long time. Just that your body literally stores, your mind stores this information, whether you want it or not. It's being stored in there, and your subconscious will react at times when you want your conscious mind to react. And so it's not that you're wrong or you're cuckoo or whatever. This is just a natural thing that your body does that we're just not taught how to manage. And so, you know, by understanding the conscious and the subconscious mind and how it works and knowing that you can actually adjust it is a very, very powerful thing. So if you're doing something in your trading or you want to do something in your trading and it's not happening because you're pressing the buttons at the wrong time and you're going, geez, I feel like I'm cuckoo because I know what to do and I'm not doing it, you have a block. And it's as simple as that. Your subconscious mind is taken over doing the action, and there's a solution. Okay? And there's a solution. Okay, with that said, I'm going to say thank you very much. Have a great day, and I will see you tomorrow.
All right, guys. Both of you, thanks so much.
Bye-bye.
Take care, and I'll see you both back here again tomorrow.
See you all tomorrow. Thanks for the questions as well. See you.
Bye-bye now.
I didn't notice what time it was. All I know is that I fell in love with you. And if all my dreams come true, I'll be spending time with you. Every day's a new day in love with you. With each day comes
Oh, that song gets more interesting as the days go by, I gotta tell you. Well, I'm not going to be able to hang out for the after show today except for just a brief minute. I am, however, going to be back at 4:30 Eastern. I'm going to even put it on the screen. Q&A session today at 4:30. p.m. EDT for free trial folks. Okay. So if you're on the free trial, if today's your first day or your fifth day, either one's fine, then just leave this room open. Hang on, I gotta type in a chat. Hang on. Okay, so question and answer session today, 4:30 p.m. Eastern Daylight Time for the free trial folks. If you're not on the free trial, if you're a partner and you got a question, you can come. Anybody that's listening to the radio program, if you want to come, you can come. But keep in mind that it is geared for folks who are on the free trial. Okay. What was I going to say? Oh, yeah, so you can come. It's geared for folks who are on the free trial that have some questions, because in the morning, with Michael trading and bouncing from market to market, it's a fast-paced environment, and I know that sometimes new people, they don't want to, they feel like they're interrupting as Michael's trying to trade and explain the trade, and so you hold back, and ultimately your questions don't get answered. So in the afternoon when we do these Q&A sessions, we did 2 of them last week. I videoed one of them, okay? It's an hour and a half, and if you're on the free trial and you would like to watch that video, send me an email, support@cfrn.net. Give me a little note there, hey, I'm on the free trial, and that video you mentioned from the Q&A session last week, I would like the link to watch that. It's not publicly available, but I am making it available on a case-by-case basis to the folks who are on the free trial. So let me know if you want to see that. Otherwise, what you do is as I close out the radio program here today, I'm going to return this room to our regularly scheduled programming, as they say, and then I'll just pop right back into this very same room at 4:30 Eastern today, and for 30 minutes we'll look at charts, indicators, answer questions, whatever it is that you want or need, I'll be here for you, okay? I will have to try and keep it, and it's so hard to do, but I do need to try to keep it to 30 minutes. So I'll see you all here then. Is there anyone who has a question about anything right now? Is there anything you need answered right now? If there is, I'll be happy to answer it for you. Okay, maybe even a question that you asked already, and because when the scroll goes up with so many people putting in not just questions but comments, sometimes things scroll by me and I miss them. So I'm happy to answer a question if you have one. Okay, if you have a question, type it in. Oh, Ron, I typed in an answer for you earlier. I bet you missed it because you put that question back in, so I'm glad you brought it up. Let me show you. Now, guys, see how I have this space on the side of my chart between the last price bar and the hard right edge of the chart? In DT Pro, this is how you do it. You go right here to View, Right Margin. See, if I click it, it's going to take mine away because I already had it turned on. Okay. Now if I go back and go View, Right Margin, you got to do your scroll bar, and there it is. And it'll stay like that. All right. Anybody got any more questions? Ron, does that cover? You got it? Okay, good. Now somebody's messaging me over here. Who's that? Okay. All right. All right, I just had a change in my schedule, so I've got like another couple minutes. Question, you had said previously that a bearish, bullish engulfing was powerful. Would you show and explain as to how it is traded, etc.? Yeah, I'll be happy to, Keith. Thing is I've got to be able to find one on a chart. Let's see. Let's see if I can find one somewhere. Okay, well, here's one right here. The context is a market that's moving higher. This candle right here, okay, it's higher. The high of this candle is higher than the previous day. The low of this candle is lower than the low of the previous day. So this candle engulfs the previous candle. Okay? That is bearish. That's a bearish engulfing candle. And the way you trade that is once you have the bearish engulfing candle, then you want to trade, actually there's a couple ways to trade it. You can just trade a break of the low of this candle. You can sell the open of the next day's candle, but one of the recommendations is that you wait for a confirmation candle, which would be this day, and then you're getting in on this day. Okay. Now, this is a daily chart, so your risk, see where that risk is up there? So depending upon, your stop loss needs to be above the swing high. Hang on, guys. I got to answer this chat really quick. so let me go back now to that question. Keith, does that explain to you, Keith, what a bearish engulfing is? Bullish engulfing would be this same pattern, but it would be at the bottom, okay? And you would have a small candle like this. Okay. Okay, price is coming down like this. Price is coming down, coming down. And it can be a daily chart, an hourly chart, a 1-minute chart. Price is coming down, down, down. And then you get a candle like this. Where the high of this candle is higher than the high of that candle. The low is lower than the low. It's got to be in context after a downtrend. Okay? And then what you're looking for is for price to then do this. So this is bearish engulfing. This is, and that comes after an uptrend. Bullish engulfing comes after a downtrend. Okay, back to the questions. That answer your question, Keith? Does it always need to be an inside bar or outside? Yeah, that's what defines it. See, it's going to the high of this candle on a bullish engulfing. The high will be higher than the high of the previous day. The low will be lower than the low of the previous day. That's bullish. Bearish, everything's the same. You're still going to have a higher high and a lower low than the previous day. That's pretty much what defines it. So it is a very powerful symbol. The larger the time frame, the more important it is. In other words, if you see it on a 1 minute, that's tradable. But when you see it on a daily like this, well, look what happened. Look at what it led to. Okay? And it's not something you're going to see every day. I mean, of all the days on this chart, how many bearish engulfing candles do you see? One. Right there. One. That's all I see right offhand on this entire chart. And look what happened. It took us, that next day opened at 1657. 1657, and we traded down to 1550 something. The swing low was 53. Okay. Let me put these back. Okay, Keith, so did that answer all your questions? Patrick, do you ever use the slingshot with the 1 hour time frame? Okay, you can, Patrick. You can run the slingshot indicators on an hourly chart. I'll show you. Let's go over here. Let's get rid of all the drawing objects. Let's go ES U3. Okay. Now let's go to hourly. Okay. Now, you had a bullish cross here. Price ran up. You didn't get a pullback to way over here. Because you're using hourly, you've got to increase your risk. You can't trade with 8 ticks of risk on an hourly chart. Can you trade it on larger time frames? You can. Okay. Like if you come over here, you're going to get a lot fewer trade opportunities. But like here's a bullish cross, here's a pullback. You've got bullish divergence. See, the markets are fractal in nature, and because our methodology embraces the underlying rhythm of the market, you can use it on a 1 minute, a 1 hour, or a 4-tick range, or a 10,000 contract volume chart. It doesn't matter. It doesn't matter what time frame. What it's going to affect when you change the time frames, it's going to change the frequency of the setups. In other words, how many setups you get over the course of a day or a week. And it's going to affect the amount of risk that you have to allocate to each individual trade. Okay? Now here you've got a bullish cross. Let me open this up a little bit. Where was I? Back here. Okay. Bullish cross. Price pulls away. Price pulls back. Look down here. Do we have bullish divergence? Yes, we do. Okay. And so the color stayed the same, so you don't need a trend line. All you need is the up close. So this candle closed at 1629.50. 1629.50 is the entry for this trade. And the entry is right there. Okay? Bullish cross, price pulled away, price pulled back. We look down here, we've got bullish divergence, and it didn't change color, so we don't need a trend line. All we need is this green candle closing up. We buy the open of the next candle, and that candle opened at 1629.25. I'm sorry, 1629.25. And from there, it traded on up to, well, I mean, the first little swing high, the first swing high right here, right after it, was 638. Okay, so from the entry here to this swing high, 29.25 to 1638. So almost a 9-point move. So, and then we come back, and you've got another. Now on this one, you would need a trend line here because the cycle changed color. So you got to have a trend line here. Okay, there's your trend line. Here's your up close after. Here's your up close above the trend line. Okay, see, because it turned red, now you have to have a trend line on this one. Price pulled away, price pulled back, close above the trend line. So you're going to be entering on the open of this candle, which is 1636. 1636 entry. Okay. That's going to be right there. All right. Now we'd have to go down. Well, no, because we're entering on the open of this candle. So you've got to swing. You've got to look at the low of this candle, which I got to move the arrow and able to do that. The low is 32.25. So now remember, the up close above the trend line, you're buying the open of this candle. Well, you have a drawdown. Okay. The drawdown is 32.25. 1632.25 drawdown. So you would have to have a stop loss of, let's see, let's call that 32. You would need at least a 4-point stop loss on this trade. Now this one here was just picture perfect. You had hardly any drawdown at all. This was just a thing of beauty. This one over here, Okay, this is what I'm talking about, where you have to increase the risk. Of course, your risk has, you know, it has to be below the BBC because price is going to come back there to test. That's what it does. And so we have a number of trades on the way up here. Now, so while that can be done, and while that is doable, what I think is probably if you'll learn to, well, there's a couple things you can do. You can use the hourly chart and the tweets or the weekly trading zones to let you know, give yourself an idea of whether you should be looking to get long, to get short, and then go to the 4-tick range to actually get your entry so that you don't have to risk more than 8 ticks. So you can get into a bigger picture trade and only risk 8 ticks by using the slingshot. To me, that's a very attractive proposition. Okay. Now, you could also, in a situation like this, you could put the slingshot on the hourly, and you get a pullback, and you go, now that's an entry on the hourly slingshot, but still go look at your 4-tick range slingshot, and inside of this pullback here, okay, inside of this, find yourself an entry on the 4-tick, so you only have to risk 8 ticks. Now, if you're comfortable assigning more risk to a trade than 8 ticks, if you're okay, with this 4-point stop loss that would have been necessary to stay in this trade, then yeah, you can trade it off of the hourly. You can. All right, let me see if there's any other questions. I just don't know what to do about my lack of doing the trial. I don't know what you mean, Bob. You'll have to explain that. You've been in here every day, so I don't know. You did the trial, didn't do the trial? Oh, brother, sorry to hear about your eye. Oh, that's terrible. Okay, I'm just scrolling through the questions here, guys, and comments. Dwayne, would you do that same exercise for the slingshot on a faster market like crude on a 150 or 400 tick chart? Keith, are you asking me to do it on a tick chart or a range chart? There's a difference between a tick chart and a range chart. Ken S. Tell me exactly what you're asking me to do. Okay, on just a plain old tick chart. Okay. So, all right, so you want me to turn this into a crude chart, okay. And then you want me to make it a 400 tick. Okay, and then GCL. Are you guys in the trading room in the morning? Are you guys into the September crude yet? You are in the September crude? Okay. Okay. So here's a 400 tick crude chart for the month of September. Okay. Ron asked, how do you remove an indicator from the chart? What you do, Ron, is you right-click, go to Indicators, go to All Active Indicators, highlight the one you want to get rid of, and click Remove. Okay? right-click, Indicators, All Active Indicators, highlight the one you want to get rid of, click Remove. Okay, I've got the 400 tick crude chart up for you, Ken. Now tell me what it is you want me to do now that I've got this chart up. And I'll wait. I know it'll take you a minute. Don't rush. Just type in what it is you want me to do. Look at how the entry's set up. Okay. Well, let's see. Right here, we've got a bullish cross. Price pulls away. Price pulls back. But we don't really have any bullish divergence there. Okay. So let's move on over. Okay. On this pullback here, we've got bullish divergence, but it's not, I'm not crazy about it, honestly. What you would need is you would need a close above the trend line. There's a trend line. Okay. So there's your up close above the trend line. Your entry would be here, and you're really losing your bullish divergence right there. So that would be a close call. Let's move on over and see. Let me open it up a little bit. Okay, here's all right, we know we've already got our bullish cross back here. Price pulls away, price pulls back. If we look down here, we definitely have bullish divergence, but we do need a trend line because the cycle has turned red. Okay. So we draw a trend line. There's your up close above the trend line, so you're buying the open 107.87, and the next swing high is 108.02, and you got another trade right here. You still have bullish divergence, so you've got another trade right here. There's your up close, so you're entering on the open of this candle, which is 107.95, and that takes you up to 108.06. And you've got yet another trade right here. And there's your trend line, okay? And you've got your bullish divergence still. There's your up close, so you're buying the open of this, which is 108.08, and that takes you up to 108.19. Okay, that's on the 400 tick. So does that show you what you wanted me to show you, Ken? Is there something else you'd like me to show you? I'll be happy to if there is. I left somebody in the chat. I'm sorry. Ken, anything else? Oh, you want to see a couple of short setups? Okay. Let's go over here and see what we can find. Okay. All right. We got a bearish cross. Price pulls away. Price pulls back. Now, because the cycle changes colors, we got to have a trend line. So that trend line is going to be like that. And you got to have a down close, so you're going to enter on the open of this candle, 108.50. 108.50. And then, I mean, this is a monster trade. This must have been on some kind of news or something. This thing goes all the way down to 107.32. Maybe it's just the way I've got it scaled that makes it look. So that's a pretty big trade. All right, let's go find another more ordinary looking short. This would have been a good short, except it didn't pull all the way back. This one over here pulled all the way back, so let's look at it. Okay, bearish cross, price pulls away, price pulls back. Okay, now once price pulls back, we got to look down here. Yep, we have bearish divergence because the cycle's at the bottom and the green line's at the top. Okay, but the cycle changed color to blue. That means we do have to have a trend line. Okay, so here goes our trend line. There's our down close below the trend line right there. So the open of this candle would be 107.39. $107.39. And then the swing low would be 107.02. 107.02. So that was a pretty good sized trade. Was that about 37 cents? Okay. But we'll look at one more for you. Let's find another one. Okay. Now this one, see, you got a bearish cross, but price never pulls away here. You don't get a pull away until over here. And you get your pull back. So this is a great example. Okay. Bearish cross, price pulls away, price pulls back. But when we look down here on the pullback, oh wait, we do have bearish divergence. Oh, I didn't think we did. Okay, so actually this is a good trade, right? Yeah. Now, let me open this up a little bit. There we go. Okay, so cycles at the bottom, green line's at the top. And because it's red, because it stayed red, it didn't turn blue, all we need is a down close. We don't need a trend line. So we would enter on this candle right here. That candle opened at, I'm sorry, we need a down close, so it's this little candle here. We sell the open of that candle, 107.22. 107.22. Now that's selling the open of that candle. And the steps again, a bearish cross, CFMA1, the backbone of the CFRN indicator set, crosses over the green line going south. That's a bearish cross. Price then pulls away from the BBC. That's the bull-bear cross line. And how do you know it pulled away? Because there's this little bit of space in here, this white space or gray space. See? Price pulls away, price pulls back. Once it pulls back, the only other thing you have to do is look down in the lower panel to see if you have bearish divergence. Yes. Did it change colors? Nope. Don't need a trend line. So I simply sell the open of the next candle, which is this one right here, 107.22. And then the swing low, 106.91. 106.91. Okay. Okay, Ken. Anything else? So you don't do anything with the cross itself. Well, it's not a part of the 4-tick range of the slingshot setup. No. Can the cross be traded? It can, but that's a whole nother world. Okay, you need to get this down first. Okay, get this high, because see, when you start getting into trading, you know, the actual cross where the ball changes hands from bull to bear or bear to bull, there's all kinds of nuances in there. There's all kinds of other things that have to be weighed and taken into consideration. That becomes a subjective trade, and the world is full of subjective trade setups. What we've done with the slingshot is we've created a trade setup that has no ambiguity. Okay, you can look at it. You can look at the chart after it happens, as it's happening, and there's never any question as to whether or not there was a trade, and if there was, if all of the criteria was met, and there was a trade, we know exactly to the tick what that entry price was. So that's what the slingshot's about, no ambiguity, because so many people have been through so much stuff with so many systems and trade rooms where, you know, the guru's going, hey, you guys get in that? Well, you didn't ever say get in it, you know. And that goes back to trade calling rooms too, which we aren't. Now, I know that a lot of you guys do like to follow Michael in the trading room, and you do like to put on the trades along with him, and that's okay, as long as you understand that's not the end game. The end game is not for you to come in and mirror his trades. The idea is that you watch him put on the trades, okay, so that after the live trading room, you then, using the platform and the indicators that we provide you with, you then spend the next 22 hours putting on and taking off trades in the simulator. And the next morning you come back to the live trading room, you get schooled again for 2 hours watching him put on and take off these trades. Then you spend the next 22 hours putting on and taking off trades on your computer, on your desktop, with our platform and our indicators. The end game is not for you to mirror his trades. The end game is for you to learn how to place the trades yourself, how to spot the setup coming a mile away, and then when it gets here, how to execute it without hesitation, how to manage it, and then how to exit. Okay? All right. Okay. Ken says, fascinating. This is very good on swing markets. How does it do when the market slows and chops back and forth? Is it pretty good to minimize that phenomena? It really is, Ken. At a choppy market, the way the slingshot was developed, it is designed to do that very thing, to keep you out of choppy trades. Because in a choppy market, you won't get all of those things coming together. Now, if you're just trading the cross, you can get chopped to death, because you don't have anything to keep you out if you're just trading a cross. But with the slingshot, you got to have the cross, the pull away, the pull back, and then the up close either with or without a trend line. And you got to have the bullish or bearish divergence depending upon the type of trade that's setting up. So yes, this trade does a very good job of keeping in a choppy market. You just don't get the setup. It doesn't all come together for you. Okay. Now, by that same token, will there be some great trades that you miss because everything didn't come together? Absolutely. And will there be some trades where everything came together perfectly and you still get stopped out? Absolutely. That's the truth about trading. There is no system, no guy, no indicator, no chat room, no psychic that can put you in the market trade after trade after trade and be right every time. It is not possible. And I wrote a blog post the other night. Anybody that hasn't read it, you really should go read it. I'm going to go over it real quickly and then I got to go. Is it this one? I think it is. Okay. Okay, how many, I want you to, okay, why can't we predict the markets? Okay, that's always a great question. Why isn't there some kind of indicator, some kind of computer program, some kind of algorithm that can predict what the market's going to do? If you listen for a minute, I'm going to read this to you and tell you why. As the story goes, 70% of current volume is traded by the HFTs, the quants, the machines. How many machines are there? I don't know. Let's say that on a slow day, okay, when the S&P only trades 1 million contracts, the average volume in the S&P is 1 to 3 million contracts. Okay, but on a slow day, 1 million in volume, let's say that we only have 300,000 contracts in the hands of individual traders. Because what I'm doing is I'm allowing for the fact that 70% of volume is traded by the machines, the high-frequency traders. Okay? So, if 300,000 contracts are being traded by individual traders, and if the average trader trades 20 contracts a day, now for you as a trader, whoever you are, that number might be high or that number might be low. But if you include the round turns and the number of contracts that you trade, I think it's still safe to say the average trader trades 20 contracts a day. I'm not saying at one time. I'm not saying you put on 20. If you made one trade with 10 contracts, that'd be 10 in, 10 out. That's 20 right there. Okay? So, if the average trader trades 20 contracts a day, we've whittled it down to 15,000 flesh and blood traders sitting at the table with us. Why is this important? Great question. You know, I should probably go over this part up here. Why does it take 90 days to learn how to trade? Well, it takes longer. We just figured that after 90 days you want to spend some time with your family. If you want to learn how to trade for a living, let me help you understand exactly what that requires. You can trade for a living on 2 points a day. You can do it with 1, you can do it with 3, but 2 is a nice even number. As an example, the S&P 500 E-mini has an average daily range of 15 to 20 points over the past 10 years. Over the course of a trading day, as the S&P E-mini travels from the low of the day to the high of the day, or vice versa, it's rarely in a straight line. A lot of back and forth activity with the occasional hairpin turn thrown in for excitement. What that does on a 15-point day as the crow flies, there may be 20 to 30 points of actual travel time. 3 points up, 2 points back, etc. In case you were wondering if it's actually possible to net 2 points a day, it is. There's no guarantee that you will, but the market does make it available every single day. On any given day, the S&P 500 E-mini will trade 1 to 3 million contracts. If the average trader traded 20 contracts a day, on the slow day, 1 million, we would have 50,000 E-mini traders at the table. I forgot. Imagine you're sitting at a table, think poker table, with every other trader who is actively trading on this hypothetical day. Jay, you with me? All right. So, now, because 70% is traded by the machines, we figured out at 20 contracts a day per trader, we've got 15,000 flesh and blood traders sitting at this big table. Now, the basis of almost every trading system, indicator, oscillator, methodology, etc., is that it's going to tell you or predict with a high degree of accuracy what the market is going to do next. Now, that's a pretty clever trick because the market in and of itself does nothing. If the bell rings in the morning and no trader places a trade, nothing happens. Every tick in the market is generated by the thoughts and actions of all those traders seated at your table. And remember, there's 15,000 of them on a slow day. Some are buying to enter, some are selling to close, some are opening with a short, and some need to buy to cover because they went short yesterday and the market didn't. Maybe their fortune teller was broke. So lots of decisions are being made. Buy to open, buy to close, sell to open, sell to close, buy to cover, sell to cover. Follow me? Of course, we all know the indicators lag, except the magic ones, so I won't beat that dead horse. I will throw you a curve, though. See those little price bars on your chart, or candlesticks, if you prefer? That's these guys. Okay. Guess what? They lag too. Yeah, price is a lagging indicator. That tick on your screen right now, let's go over and look at a tick. Let's get all the way over here so we can see an actual tick. See, it just ticked. Okay. There, it just ticked again. The tick on your screen right now was generated in the past, seconds, milliseconds, by the thoughts, decisions, and ultimate action of one of those 15,000 traders sitting at the table. In order to know what is going to happen next, to divine the future, has nothing to do with prophesying what the market will do. It actually requires you to crawl inside the mind of a trader. Make that 15,000 traders on the slow day. Can you read my mind? Can you read your wife's mind? If not, we have a problem, because every one of those systems, indicators, oscillators, and methodologies all require you to know what's going to happen next in the market. That's why they exist, remember? So what are the odds that for $99.97 you can grab a piece of software off the internet, hurry, only 10 copies left, that is so sophisticated it can read the minds of 15,000 traders, analyze the data, their thoughts, and then report back to you in time for you to actually put on or take off a trade? Well, right there, it tells you that it's impossible. It's not possible to know the minds of 15,000 traders. And even if you could know the minds of those 15,000 traders, then you, on top of that, you'd still have to know how they're going to act. It's not possible. I didn't figure this out by myself. I stand on the shoulders of a little G, as in giant. Go read the book by Mark Douglas, Trading in the Zone. It's where I was first enlightened, and he certainly explains it much better than I do. Slow down. It's a great book. It exposes the problem, but it doesn't pack a solution. I hate to spoil the ending, but the bottom line is you need an edge. When I finally grew tired of looking for an edge, that's when I found one. You see, when Mark says you need to find an edge in the book, what he's really telling you, in my opinion, is you need to learn how to trade. What I'm telling you is that in order to learn how to trade, you have to first learn how to read a chart. The day I stopped Googling for miracle cures and learned how to read, the edge appeared. Honestly, it was there all along. I just needed to shed a lot of baggage, and then the scales fell from my eyes. The journey around Trader Mountain took me 4 years. Our goal, if we're successful, is to get you there in 90 days. We can teach you how to trade, but only you can make you a trader. The journey starts here. Right there. Okay. Now, see if I stirred up any more questions. And I really do got to go. Okay. I think I've covered all the questions. I've got somebody awaiting me in the other chat room out on the website. This thing's still ticking along. Now this trade right here that just went off, okay, bearish cross. You had a trade way back here, but you also just had one right here. Price pulled away, price pulled back. On the pullback, which is this candle here, price has changed color down on the cycle. So what does that mean? That means you need a trend line. Okay, and there's the close below the trend line. So you sell the open of this candle, 106.73. 106.73. You sell the open of that candle, and then the swing low is 106.59. 106.59. 106.73 to 106.59. Michael's our crude trader. I don't really trade it myself, but from what I understand, that's a pretty good trade, I think. 106.59 to 73, that's like 14 cents. I think you guys shoot for a dime in the live trading room each day. So this one here has 14 cents in it. And that's if you enter at the open of this candle and exit at the low of this candle. Okay? If you're just trying to take a dime out of the middle, then you got your dime. So. Okay, guys, I will be back in an hour at 1:30 Pacific, 4:30 Eastern, to answer questions. Okay, I feel like I just did the whole Q&A session right here, right now, but I know some people already left, and I promised them I'd be back at 4:30. So I got to take a break, eat some lunch, and then I'll come back 4:30 Eastern to answer questions. If you're on a free trial, you really should make it a point to be here. All right, and if you're already a partner and you want to come, you're welcome. Yeah, anybody's welcome. But if you're on the free trial, you should make it a point to be here. Okay? All right, guys. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.
You're listening to CFRN, the Chris